2015. What a year it's been. We became Proximus, and thousands of us signed the flag as a symbol of how we transformed this company and returned to growth 1 year earlier than expected. So what did we actually do? We continued investing, especially in our networks and IT, as well as in our convergence solutions, making sure we can offer excellent customer experience. We further deployed vectoring on our VDSL2 network and started the rollout of Vectoring 100, bringing dedicated high-quality speeds to our customers. We also continued investing in the transformation of our IT. We completely reviewed the processes for ordering, provisioning, and billing, making sure our customers have the best experience. And we decreased the impact of incidents in our IT infrastructure, thanks to the focus on stability and performance. At Proximus, we stand for best mobile quality, and delivered on this with 4G Boost and the launch of 4G Plus, Smart Wi-Fi, and the Mobile Coverage Extender. Scarlet attracted plenty of former Snow customers and launched the cheapest prepaid offer in Belgium. Proximus was the first to launch a commercial offer on the LoRa network, enabling the Internet of Things. We're now connecting everything. With Satellite, we built Belgium's first tolling project for trucks with automatic billing, thanks to our Internet of Things solution. To help our customers stay secure, we launched our Cyber Defense Center and refocused our portfolio to answer threats emerging from new technologies. We also changed our communication to enterprise customers. We now talk about solutions that matter and help them work smarter, rather than just about technology. This clearly pays off. In 2015, we achieved some major business deals. We won back Belfius, for whom we're designing a future-proof network infrastructure to support their banking applications. We also helped Portima to migrate their applications to our data centers. For ING, we installed fiber between their headquarters and more than 250 of their branches. Also, medium enterprises count on us. We optimized the data centers of VWR in both Amsterdam and the US. And Spear IT played a major part in our growth on the SME market. Through a regional partner network, it brings them integrated ICT solutions. Telindus Netherlands remains one of the key European reference partners for optical services and received multiple awards. Telindus Luxembourg keeps building further success with most of the key financial institutes in the country. And BICS established the world's first international call on Voice over 4G. 2015 was also the year we reinvented Proximus TV with a new, easy-to-use TV interface and app enriched with amazing new content. Today, already 300,000 customers enjoy the full experience. We replaced old decoders at no extra cost for the customer. By the summer of 2016, we'll have proactively swapped 400,000 decoders. Proximus now proactively proposes a full installation by the technician to make sure everything works perfectly from the start. We also radically changed the way we handle complaints. Employees now manage them from A to Z and are end-to-end accountable for the satisfaction of their customer. We are truly going digital. We revamped our website, proximus.be, radically improved the support section, got very positive feedback from customers on our new My Proximus, and saw more and more customers switch to e-billing. To secure our investments for the future, we have to generate a sustainable level of cash. Thanks to a close collaboration between finance and our business teams, we optimize the way we manage our inventory through an improved sales forecast and ordering planning. Structurally reducing costs is also key to return to growth. Our efforts to simplify the network and move customers to the latest technology allows us to switch off old infrastructure, sell obsolete buildings, and reduce energy consumption. Speaking of ecological footprint, we achieved our green targets earlier than planned. We even won the CDP Green Award for our efforts. We also continued investing in the development of our employees, focusing on coaching and feedback. With our Good to Gold culture, we're making sure we all develop a growth mindset and the necessary skills for the future. We are Proximus.
Good afternoon, everyone. Welcome here at our office, and I think there are some people also potentially looking at the streaming, but only the people in the room can ask questions. So you are the lucky ones. So I will start this session with some highlights at group level. So, because I think we are very proud of the results we have been able to achieve in 2015. It is the first year that the company recovered with growth, both top and bottom line, for many years. It is 1 year ahead of our original plan that we described to you, I think, in our precedent Capital Market Day, beginning of 2014. So we are quite pleased to see where we are. And I think the most important element is that we are there because we were able to attract a lot of new customers. You see here some figures like for the fourth quarter only, so 44,000 new TV subscriptions on the fourth quarter of 2015, 28,000 fixed internet lines, 50,000 new postpaid cards, and 20,000 new triple and quad play customers, household and small offices. This translates into, I think, strong financial increase on the core revenue with 0.5%. Group revenue is -0.3 because BICS, who had a very strong year and is mainly focusing on margin, had some decline of revenue in Q4 because of some voice decline. But we were able, and that's the most important, to improve the direct margin because we talk about profitable growth. So it's not only growing the top line, but it's mainly making sure that the top line translates in direct margin growth. And in the group EBITDA, we have a strong 8.4%, helped by some phasing of the tax on pylon, which was last year fully accounted for in Q4 and spread over the year in 2015. So as I said, we have achieved our growth ambition a year ahead of the initial plan. I think you see that we are very well in line with the guidance, a bit on the high side, which are at the group EBITDA, which is always nice. So we are growing by 2.1% on our core revenue, growing 2.5% on our international BICS business, growing EBITDA at 4.9% and investing 926 million, excluding the 75 million spectrum that we have acquired in 2015. And this growth, you can see it in all the business units. The consumer business unit is growing, the enterprise business is growing, the international BICS business unit is growing. The only place where we do not grow is in the wholesale business, which is relatively normal because, for instance, the base customers of last year have been, most of them swapped to Scarlet and are now in the figures of the consumer business. The question very often I get is, how did you achieve the growth? And I think probably I would put forward just two elements. I think we were able to achieve the growth because we have changed the company with two very strong focus. A first focus, which is very much on customer. Everything we do, we try to do it in a customer-centric way. Being it innovation, being it network investment, being services, everything we do is there for the customer. The other element is everything we do is in the context of a sense of purpose, which is written here. We constantly keep people connected to the world so they can live better and work smarter. And to get there, there has been a long program of transformation, a journey into a new culture, in developing our people, making them change into what I call a growth mindset. The customer centricity and the people investments are, I think, the two specific elements that are specific to Proximus and that has helped us to grow. Next to that, you see here a few more very specific ones. Customer experience. We have improved customer experience very much in 2015. We have simplified our offer, all our products. A lot of customers have been migrated to new products, and we have made our offer more simple than it used to be in the past. We are moving into customer-centric and leaner organization, making sure we are a more flexible, a more agile, and a less costly organization. Network, we've invested a lot in network, but we have also moved our customers to the next technology. Sometimes in the past we were investing, but we were sometimes forgetting to move the customers on the latest technology. We have put more efforts and emphasis in moving the customer to the VDSL technology, make sure they have the latest modem, they have the latest decoder, so they can enjoy the best of what we offer as a company. We are really progressing in the omni-channel, still some work to do, but we have really started to provide an omni-channel service to our customer, and on the service side, we have really improved the service to our customer. And last but not least, we have invested more, thank you. We have invested more in content, be it film, being Netflix, being sports content, being it kids content, so a lot of efforts in the content area, but also a lot of effort in innovation. You have seen some in the film we saw, on the Internet of Things part, on security, on managed services. So also very important for us to make sure that we invest in the future of the company so that we can compensate some decline on some legacy business by providing and building new growth pillar with our innovation. So this has translated into improved market position, improved market share, strong acquisition of new customer, very much convergent offerings. I mean, we are talking about convergent for many years, but we see more and more traction for convergent offers, both on the consumer side, mobile fixed, but also on the enterprise side, where we talk convergence of connectivity with ICT products and ICT services. Value-based, so it's not about only growth of top line, it's growth of top line that translates into growth of direct margin, and of course, still a long way to go in simplification and cost reduction, because as you can do, because you do all of you a lot of benchmark, our cost structure is still too high, and we will focus in decreasing our cost structure, helping us then to grow the EBITDA and to continue investing in our services, in our innovation, and in our network. Here you see a few figures and also market shares, which I think is always nice to show market share because it gives you the relative performance of the company versus competitors. You see the first market share is about fixed internet. So there, over the last 3 years, we have been able to increase our market share on the fixed internet by almost 2 percentage points, reaching 46.1. And during 2015, on a year basis, we have acquired more than 115,000 more customers, which means an increase of 6.6% over the year. On TV, which I think is probably one of the biggest growth in terms of market share, you see an increase of 3.3%, coming to 35% TV market share, which gives us still some big headroom to grow. So it's a good realization. So we show that we can grow, but we can still grow more because normally everybody that has internet should potentially have a TV. So in that sense, there are still room to grow. You see that we have acquired 167,000 customers and we have done a growth on our subscription basis of 10.5%, and mobile postpaid as well. We have been able to grow by 1.3 percentage points to 47.1 and adding 167,000 new mobile postpaid cards. And knowing that we have, you will see it, you will have some decrease on prepaid, but the most important is the big acquisition we have done on new mobile postpaid customers. So if you see then the convergence, I mean convergence, we have now 43% of all our subscriptions which are represented by triple and quad play convergent offer, both residential and small offices. So it means that we have now almost 1.2 million customers taking 3 and 4 play with us. On the enterprise, so the other format of convergence, we see more and more customers taking both telco and IT solutions. We leverage more and more IT capabilities that are close to our core, to connectivity, but it really helps us to position ourselves further on the enterprise market and potentially resist to some ambition of some of our competitors to enter there. I think we have there a strong foothold, we have extremely good service level, and we are able to bundle connectivity with IT services, and that is really indeed what our enterprise customers are looking for. Value management, I said it. You see that our top line has grown by 2.1% in 2015, and our direct margin has grown by 1.6%. I mean, some of you said the last quarter growth was a bit less than anticipated. It's mainly because we sold less devices, and that's also what you see here. We are able to really grow where it matters in product categories where we can deliver additional margin. And if we sell less devices, it doesn't matter so much, because in the end, it's about the connectivity that translates into profit and into margin. You see here some nice growth in turnover, TV, internet, ICT, mobile. Of course, the fixed voice is not there. Fixed voice has been declining, but you see that all the other products have been growing in 2015. Cost, strong focus of us also on cost. We have here what we call the core workforce, so it's the group without BICS, and we show the group with BICS. I mean, what you see is that we have been able to reduce our workforce costs, being the internal and external people working for Proximus, in the OPEX area by 4.4% over the last 2 years. If you see that expressed in percentage of the turnover, I mean, there is pure OPEX workforce in percentage of turnover, and you see that we have been able to decrease it from 28% to 26%. The ambition is to further reduce it by around 3 points between now and 2018. At group level, it's a bit different, but that's because for BICS, we have a very different strategy. There is still a lot of growth potential for BICS in new value-added services, and BICS has a strategy where we will potentially hire more people and put less focus on cost, but more focus on growth. So there is a bit a different focus on cost, where we want to decrease the cost in the Proximus company, and we can still increase our OPEX on BICS, because these can be still translated in significant growth opportunity. This is the global expenses. There you see the picture is a bit mixed, but you need to take into account that we have had to provision significant extra cost for tax on pylons over the last 2 years, which has impacted the global OPEX. We are using more spectrum fee, and we have done some innovation. I'm very confident that the global picture will be very different in the years to come, where we will be able to not only reduce our workforce OPEX costs, but also the global expenses. This is what we foresee anyhow in the coming years, because we have invested a lot in simplification, and very often in the beginning you need to invest before you can grasp the result from it, and a lot of our programs are backloaded. But I'm sure in the presentation of Geert, our CTO, you will already see some flavors of what we have been realizing and how it will translate into cost reduction in the coming years. CapEx, and that's also an important element. We are in an industry where the need for increased capacity, the need for faster network, more bandwidth are still increasing a lot. And of course, I know that you would all like to see us say that our CapEx will decrease, but unfortunately, I think it is not yet the case. We will continue to invest in network. We have been able to reach the best 4G coverage, but also the best mobile experience in Belgium, thanks to some investments. We want to invest more into our fixed network. We have now fiber up to the street cabinet. We are pushing fiber further down the network, and we are pushing some fiber for enterprise business. This all is requiring some investments. And next to that, in the context of simplification, we are transforming also a lot of our IT systems into much more performance system, which will enable us to be more agile and to decrease the cost. That's why you see that our investments were 926 million and 75 for spectrum in 2015, and we have a guidance on 950 million for 2016. So this is the first introduction, and now I will give the words to our CTO, Geert Standaert, who will give you, I think, a quite interesting and thorough presentation on all our ambition in the network and IT area. Thank you very much.
Good afternoon to you all, as well a warm welcome on my behalf. My intention is to guide you, in fact, a bit more in detail through our 3 key investment priorities. And I will talk about build, and that is about building future capabilities, network capabilities. I will a bit zoom in into simplifying, because as Dominique stated, we want to become more efficient, more lean as a company. And I will talk as well about enablement through more agile IT, and there besides efficiency, it's about improving on our time to market. But first, let us zoom in on the build part. And I'll start with our fixed network. What have we been doing last year, 2015? First of all, you saw us extending our vectoring footprint. And you see here that we've obtained a population coverage last year, end of 2015, of about 43%. Due to that, you see that the average speed has increased, and we're now above an average speed of 50 megabit per second. The other element that I want to raise is that the way we deploy our vectoring speeds, we do it as such that we focus on high quality bandwidth, which is good video-grade quality. And you might have seen that we are considered to bring the best video quality on Netflix in Belgium, and certainly the quality of our networks contributed to that position. We also launched a 100 megabit profile on vectoring, and it is now as such that 1/3 of the population can access that 100 megabit per second. What's foreseen on the short term? Of course, we are going to further extend our vectoring footprint. And the idea is the most massive rollout will happen this year to close, in fact, the vectoring rollout in 2017. Once that is finalized, we will have about 75, 80 megabit per second of average speed, and we will have 2/3 of the population that can access that 100 megabit profile. On top of the downstream and the improvements that we will have there, we will also improve our upstream bandwidths. And today, we have a maximum capability of 20 megabit per second on the upstream. We'll bring new profiles into our network to raise that to 40 megabit. Now, the thing is that we have not only invested in improving the capabilities at the network side, we also invested a lot in improving the experience indoor at our customer. And then we're talking about typically the Wi-Fi experience. And it is as such that some weeks ago, Test & Coop consumer organization, they made an analysis of who had the best Wi-Fi products indoor, and Proximus came out with the best performance. So the elements that we brought, for example, to repeat Wi-Fi signals or to extend your Wi-Fi using PLC technology, we have the best product on the market, and this remains a key focus for us. That is not only bringing technology from a network perspective, but bringing experience, end-to-end experience to our customers. On the midterm, and then I'm looking a bit 2016 and the years ahead. What will we do? We will further densify our fiber to the curb footprint. So we will bring the fiber closer to our customers. And by doing that, we reduce, of course, the distance that you have to travel in copper. And so that is, you know, our Broadway program that we had, where we had more than 25,000 optical platforms now alive in Belgium. We will further extend that. That is one. But we will also further proceed with fiber to the home in greenfields. We started that last year. We are now in full operational mode, and that will become the normal way of operations. And we will do as well some selective fiber to the home brownfield projects in the future. Now, second pillar is further enhancing our VDSL performance. And we are doing 3 types of investments there. One is that we are looking at G.fast technology. And G.fast technology, which brings higher capabilities when you have shorter copper distances. So our plan is by the end of this year, 2016, to bring first G.fast implementations. Now, the G.fast implementations that we see in a first instance is where we pass at an MDU, so a multi-dwelling unit. We will go with fiber into the basement and reuse the copper wiring that is in that MDU. So the G.fast technology, G.fast equipment is sitting in the basement, and there in the basement we do the reconversion of electrical to optical. Speeds that we can achieve on this technology are beyond the 700 megabits per second per customer. So we can talk about fiber-alike speeds there. Second technology that we're looking at is what we call the V35B technology, which is called in the industry as well the ultra vectoring technology, which is an interesting technology that brings as well higher capabilities on distances, but where now, to give you an idea, we believe that we can get to the 250 megabit per second dedicated per customer on a range of 350 meters. So this is, of course, in labo testing, and we have to bring that on the field. But if you know that we have about 60% of the population already today, with our current FTTC footprint, within a 400-meter range of an optical node, it gives you a kind of idea that we can bring, even on our existing copper assets, higher speeds using the copper and densifying our fiber footprint. Third technology, and this is a technology where we're working together with University UCL, and where in fact we launched a company which is called Tessares, where in fact the technology, and this is pretty innovative technology, where we want to bring something differentiating on the market, and also where our plan is to bring that technology alive into our network this year. This is about bonding technology. And what is bonding about? You have your fixed capabilities, you have your mobile capabilities, and in a very intelligent way, you will start to use both. So, for example, I give you an example. I'm watching TV. I'm starting to surf. At a certain moment, I pass the capabilities of my fixed bandwidth. At that moment, the mobile bandwidth opens up. And I will be using and the assets that we brought in place on fixed and the assets that we brought in place on mobile. And so what we're doing there is really differentiating from what other players are doing, and it's very, very innovative work, but where we have good confidence to bring that technology as of 2016 into our network. We have as well a third pillar, and the third pillar is more about what we call the more distant zones, where typically you will find that today we have our ADSL technology. So there, it makes no economical sense to build there two competitive networks in those regions. And that's why we have asked there as well to access, in fact, alternative networks, and we asked our access to the coax network. And so in the court, we got the approval that the coax players should open up their assets, as long as our demand is reasonable. And now we're expecting some guidance from our regulator on that reasonability, where the guidance is nevertheless expected in the near future. Enterprise. Short term. We want to accelerate our fiber to the enterprise, fiber to the business deployment. What you know is that so far what we have done is that we were with an offering, a point-to-point fiber offering on the market, and that we have covered, in fact, in Belgium, the industrial zonings. So these are the zones where you have a high concentration of enterprise business. Now, what you have to know, if you look at the Belgian landscape, in fact, and you look at where are the enterprise sites in Belgium, they are pretty geographically scattered. It's not as such that everything is residing in certain zonings. As we want to accelerate our access, our deployment for FTTB fiber to the business, we've decided a bit to change, in fact, the way we do it. And there are two big changes. First change is that we will now deploy as well GPON. What is GPON? And I brought a small picture with me. So today you have a point-to-point offering, and in a point-to-point offering you in fact have a dedicated fiber line between the enterprise side at one end and the technical building at the other end. With GPON, you see now that somewhere in the middle of that way you will install splitters. And you go with one optical path to a certain point, and then from that splitter point, you will go to different enterprise sites. So we will start deploying this architecture. To be said that the point-to-point offering remains, of course, in place. Second element that we do is that we will maximally reuse the assets that we brought in place when we did our Broadway program or fiber to the curb program. When we did that program, fiber to the curb, we installed, in fact, ducts, and in those ducts there are different subducts. Several of those subducts are empty, and we will reuse these subducts to do the deployment of FTTB. To make it a bit more clear, I brought a drawing with me, and you see here at the left our current situation. We pick here a certain region. You see there the purple dots. The purple dots are there, all enterprise sites. The color is by coincidence. The lines that you get there on the scheme are where we have our current assets in place, and that we brought in place when we did fiber to the curb. So where we have, in fact, ducts with subducts available. What are we going to do now? And that you see at the right-hand side, you see that, in fact, with a kind of minimal trenching, we still need to do some trenching, but it's minimal trenching, we can reach the whole of that enterprise community there. Of course, we will have to do some blowing of fiber into the existing ducts. Of course, we will have to install the splitters. But it is at one end, do fiber to the business acceleration based on GPON, at the other hand, based on the assets that we already brought in place. The other element that I want to bring is that when we will be doing this, we will combine that with two other things. And that is, of course, use that as an opportunity to densify our fiber to the curb footprint. While we will do trenching, etc., we will look at the design and we will say, listen, okay, here and there we will bring additional optical nodes that are more than for the residential segment. Also, we will use it to bring more flexibility points for mobile densification. And then we talk more about small cells because we started as of end of last year with bringing small cells into our network. You know that we are a smaller operator, but nevertheless we have been sometimes world first to bring technologies. We were world first VDSL, dynamic line management, vectoring, world first last year on LoRa. We have, again, different R&D projects in the pipeline. One is on the G.fast. I just explained it. The other one is on the V35, the ultra vectoring. One that I want to highlight is that we are having and that's work we're doing with another company, but one we believe in and we're confident that it will help us enormously when we will do the densification, is that we are building a new, smaller active node. This smaller active node, what is the intention? You have to take into account that we want to reach, let's say, 50 homes. That smaller node can be backhauled by fiber, but it will also we will also be capable to backhaul it by copper. And then I'm talking about bonded copper, and not the bonded copper of two pairs, but bonded coppers of multi-pairs. Multi-pairs where we believe we can reach the gigabit performance. We will remotely power it through the copper, and we will embed in that active node an automatic MDF capability. You know that in the past, AMDF, automatic MDF, have been tried, but was not that successful. But what was the reason? Because we were talking about big MDFs. Here, as of course we do further densification, the number of copper lines that we have to address is becoming smaller. And we really believe that with the maturity of the technology that is there, that we can make this active node It is also, we will have a sealed unit that you can even bring underground. And this is an innovation that should help us. We hope to get that successful and the first prototype by the end of 2016. And then we are pretty confident that we can make this then work. And of course, that will contribute substantially in our FTTC further rollout. Of course, we're not doing this alone, we're doing that with partnerships, where we're working with different universities in Belgium, spin-offs of those universities, startup-alike companies with expertise, but also traditional partners like the former Alcatel-Lucent here in Antwerp, now Nokia, to nevertheless, although we're small, sometimes be first by bringing relevant new technology. In the mobile network, last year we did a lot on 4G, and I know that in the previous quarters everybody said that they were the best, and that was maybe a bit confusing. Now we have the BIPT itself, who has published a comparison, which is really an apple-to-apple comparison. The conclusion of that comparison is Proximus is the best mobile network. And you see here our coverages, 99% quasi on outdoor, 93% on indoor. But besides that, and something that I want to highlight is, we are not only in building networks, we are there to connect customers, not to bring technologies, but to bring experiences. And we have focused a lot on improving those experiences on our network. One I want to bring is on voice. You see there, in 2 years of time, dropped calls divided by 2, which is the best experience you can get in Belgium. Average speeds, you see there on the download 23 megabits per second. On the upload, we're close to the 13 megabits per second. Best on the Belgian market. We were the first in Belgium to launch 4G+. What do we do with 4G+? We bundle the 800 megahertz with the 1800 megahertz. You can get top speeds up to the 200 megabit range. In average, with the 4G+ capable device, we measure 32 megabits per second down. What are we going to do? We are going to bring 4G at the level of 2G. And that's one. But we are going to further invest in our experience tuning. So what we brought into our network was a lot of data analytical capacity. And it's due to that data analytical capacity that mainly we could work on coverage, on weaker spots into the network, and that we could work on the voice experience. But we are bringing in more data analytical power that will allow us to end-to-end manage the application experience of our customers and make as such that the end-to-end experience that somebody is having when, for example, using Facebook, that we will have the best experience end-to-end on our network. Other elements around experience enrichment, of course, we are going to further roll out LoRa, or IoT network. We're going to further extend our 4G+ footprint. And the other one I would like to raise is that also this year we will launch VoLTE, voice over LTE, to bring HD voice over data. The growth on mobile data. Smartphone penetration, we are going towards 60%. Again, we grew on mobile data with close to the 80% on our mobile network. Mainly coming, of course, from one end that we have more and more customers on 4G, and you see that we have passed the 1.2 million of customers on active customers on 4G, and you see that in average we are evolving towards about the average 1 gigabyte of data spent for a 4G user. Of course, when we put this all together, you have a growth. Which continues to be exponential. Last year, remember, it was a plus minus a times 2 growth. Now it's a growth of about 80%. It means that if we look a bit the years ahead, that we of course have to look at how will we deal with that capacity growth. Will be coming from 3 pillars. One will be technology, and the first one to bring into the network will be the high-order MIMO technology. This is technology that allows you on the same spectrum band to get more bandwidth through. And it's technology efficiency that you bring there. Of course, spectrum. remains crucial. We believe that in 2015, we have reached the top of 3G consumption. And that as of now, that there, the 3G total consumption will start to go down. This means that, of course, we will still need that spectrum, but that in the coming years, we will be refarming that spectrum from 2G, 3G, to 4G. We still have the spectrum of the 2600 megahertz that we will activate in the coming years and should be activated for capacity reasons. And beyond a 5 year, we will even have to add additional spectrum on that. So spectrum, pretty crucial. Third element is densification. And what we started to do there, first of all, mobile network of Proximus, we have the most macro sites in Belgium. And we continue to invest in that, to add additional macro sites. At the other hand, we started implementing in more in city zones where we see that we have high demand zones. We started to implement our small cells, and in the years to come, that number will as well grow. Simplification, the second chapter. What have we done? 2015. First, we outphased further our legacy telephony, and we are now above the 50% of the install base of legacy telephony that has been outphased. Also, due to that, because you get the switches, the traditional switches out, of course, square meters are freed up. Of course, you can free up these buildings and outphase those buildings. Was one thing. Second thing, and this happened maybe more under the radar because we were working on the foundations, is that we did a full transformation of our IT architecture of the CBU domain. And where we're talking about the sales, ordering, and billing chain. And in fact, what we built is a full new chain for CBU. And that is now ready. Yeah? And as of now, we will be migrating customers that are still on the legacy IT chain. We will start moving those customers in different waves in the months to come to a full new IT chain. It's not as such that we could not already obtain yet certain savings. You see there some numbers that already just while doing this that we could achieve. But of course, it is as of the moment that we will have fully migrated that we will capture the full benefits of this transformation. So what is scheduled? First, one decision that we took is that we will accelerate the outphasing of the legacy telephony. And what we will do is we will do this in 2016 and 2017. By the end of 2017, all legacy telephony is out of our network. That is one. Of course, by doing that, we can free up again additional buildings. We can outphase again additional buildings. Currently, to give you an idea, the cash savings that we had of the work that we did so far was about around 4 million. Once this is finalized, we believe that we can recurrent bring a saving only in this domain of 35 million euro. Second simplification is, and this is started beginning of this year, is in fact that we replace the different core networks that we have by one unified core network. A core network running on optical and running on IP. On IP, yes. This is a replacement that we do. And while we do this, we make this network fully SDN capable. And that SDN capability gives us really means to automate all the actions that are necessary afterwards to further add, do moves, to do changes. To give you an idea, by doing this, we believe that we can cut in 4 the manpower that we will need to maintain and manage that core architecture. In addition, it's a core architecture that is capable to deal with all the upcoming bandwidth needs that will be there. And so the switching that we are doing is at 100 gigabit per second, but in the labs, first in the world, we did even 1 terabit per second switching on this network. So this is a fully scalable network, highly automated, much more reliable. The cost, we made a projection that we said, if we would have continued in our current way of working in the coming years, versus this new way of working, we just cut in half the total cost. And then it's total cost, equipment cost, and manpower. Third zone of simplification is rationalize substantially our IT landscape. So I told you already about the mass market and that we will do the migrations of customers this year towards that new target architecture on mass market products. We will do a track as well in enterprise. And there we have decided in enterprise to build, in fact, a full greenfield stack. So we will build a top-notch greenfield stack. This will be combined with a transformation program at the site of Bart in EBU. And by doing both, in fact, we can simplify substantially the total IT architecture. And this will be leading only within technology. And I'm not talking now about the savings and the efficiencies that this will generate in customer operations, in sales, marketing teams, but only from a technology perspective, so maintaining, supporting this IT environment, we believe we can get 35 million euro savings as well in this domain. Another simplification that we are thinking about, a bit midterm, is to go further in our network simplification. And again, a drawing, you see that today we have between our core network and our street cabinets that there are two lines, a blue line and a purple line. So we still have their copper assets and we have their fiber assets. We are migrating all products and services that require that copper asset between our technical buildings and our street cabinets. And as such, we can remove that copper completely. To give you an idea, that copper is 25% of our total copper assets. 25%. That has to be supported, maintained by copper field teams. It's one. You see there as well that for the long reach, we aim to bring this long reach on coax. And you see as well that at that moment in time, there is no ADSL any longer in that picture. Mind, if the ADSL is totally outphased there, we can even reuse the spectrum of ADSL to even further improve the totality of the VDSL experience. This will allow us to enter into a second wave of building outphasing. So there are no numbers here yet, but clearly this is qualitatively where we aim to go to, and all actions to anticipate on this have been started up. Last domain is in the enablement domain. And here it is about, because so far, in fact, IT was supportive. It was a team that was supportive to typically the other units. But IT will evolve and is becoming a differentiator on the market, because the way your IT is organized determines besides efficiencies, as well speed to market and time to market. What we have been doing under the radar is that before we had a kind of vertical, silo-organized IT architecture. That is now being fully horizontal, made horizontal, with higher flexibility in all those layers. That is one thing, but that's fundamental, because that gives higher agility in your backend systems. The second thing that we have put in place, but where we will put an accelerator on, is our strategy, which we call the bimodal strategy, which is keep high robustness in your backends, but bring much higher agility in all your front ends. And higher agility means you can go to daily releases, weekly releases, and by bringing new things on the market. Second element, not on the drawing here, is your data. How to deal with your data to make it one unified data pool, where first of all, you can bring then an omni-channel experience, but also much more personalize the interactions that you have with your customers. Last slide, 3 other elements in the enablement. One is about cloudification. If you have made your IT architecture much more agile, this architecture is running on data centers. And you have to make that underlying data center architecture as well more agile. And so in 2016, we will bring SDN capability into our data centers so that end-to-end we can have a higher automation. We're also looking towards the concepts of hybrid cloud, but that's more in an analysis phase. You know that we have 3 data centers. Potentially, we could reflect on scenarios where you go to 2 owned data centers in a hybrid model. Softwareization. The other term that you might have heard already a lot is the SDN NFV, the network function virtualization. What is it? The telco functions that you typically had in silo architectures till now are becoming software. Software that you will run on a traditional cloud architecture. What we are doing there is mainly this year is about proof of concepts. So we are doing different proof of concepts and where we are comparing different type of methodologies. We are doing proof of concepts on SDN and FE with what I would call the traditional players, think the Nokias, for example. We are doing as well proof of concepts with challengers. More challengers that were more niche players in certain domains. We are confident that with this technology, we certainly can bring way more agility into our way of working. And normally, this should lead as well to additional cost savings, which we have not quantified yet because we are more in that learning phase. First implementations, though, can be expected 2017. And how we see it is, as we will have to add additional capacity, as we will have to renew certain platforms at that moment, we will always try to see, can we do that in a virtualized way? So it's not a kind of forced transformation program. It is as we grow, and it is as we renew. We will always, and with preference, look at that moment at an application-alike kind of deployment. Last element that I want to raise is that when we talked about and when we reflected on that architecture of higher agility, that higher agility is built on a concept of open APIs. Now, at the same time, we are not only using, our idea is not only to use those assets to bring higher agility internal Proximus, but we are also opening up these assets to third parties. And that can be development companies. We had last week a hackathon where we opened up some of our APIs and other companies started developing on top of that. Can be smaller companies, can be bigger enterprises. But what we want to do is the assets, whether they are in the network domain or the assets, whether they are in the IT domain, open them up through a concept which we call enabling company, and where we want to position ourselves as well as an enabler for further digitalization in Belgium through a network of many other players. So, to conclude, we do not build networks, we connect customers. We do not bring technology, we focus and bring customer experience. And we're going to do this in a way more efficient way and a way more agile way. That's a bit the conclusion, the pitch line that I would use in the elevator, but I hope that you got a bit better insight in what's behind that pitch. Thank you very much. And now I give the word to Dominique again.
No, I have not changed jobs. I'm not running the consumer business, but I have to excuse Philippe van der Voort, the head of the consumer business unit, who could really not be here today. So as he is not there, I will try to highlight everything which has done on the consumer, which I used to do before I became CEO, so I have some advantage in doing that versus the other colleagues. I think we have had a very strong presentation of Geert on everything we do in the technology. This, of course, has to translate into our service and product offering to our customer. I will start with, indeed, the residential and small offices business, and Bart will afterwards highlight it on the enterprise business. A lot has been done as well for the residential business. We have built really 2 brands. You know very much what we do on Proximus, but we have also invested quite substantially in our Scarlet brand, which is addressing the smart shopper or the customer interested in no-frills product being at a lower price with less added value. We have also worked a lot on our convergent solutions. We have brought a lot of new product for our small enterprises. We talk about OneDrive for Business, so a lot of agreement also with the Microsoft suite and offering OneDrive within our bundle so that small enterprise can not only have connectivity but also the whole aspect to work fully automated, also cloud-based with the OneDrive business solution. We have bit switch. It means that people can, on one phone, have two numbers, one number for their private calling and one number for their enterprise calling, and this on one SIM card, which is very appreciated by small enterprise customer. We have the mobile coverage extender, as Geert said, to enhance the Wi-Fi and the connectivity. We have both on the mobile connectivity with a mobile extender. We have also Wi-Fi extender to make sure that in all the offices and all the house, the connectivity is perfect, knowing that houses are becoming more and more Faraday cages because the new building structure use more and more concrete and isolation techniques. So it is becoming more and more important for us as telco operator to look at how is the quality of the connectivity inside the house. And that's something we have really tried to bring forward, probably even more than our competitors. We have invested a lot on our TV experience. I mean, we have done a fully new TV interface, which is a much more interactive, intuitive, video-based TV interface. We have invested a lot in new contents, but we have tried to do that in a way which was the most cost-effective way. So we have brought Netflix onto our TV platform. We have made an agreement with ESN to make sure that we could have the best sport offer for our Belgian customer at the best price. So in a non-exclusive way, we are now offering the full suite of Belgian football, but we are also offering a lot of international football, being the Spanish, the Italian, the French, the FA Cup, the Portuguese Cup, name it. We also have the NBA basket, we have ATP tennis, we have e-Formula 1. So all these type of sports are now offered to our customer for bundles which are costing €15 a month. So you can imagine that we have done a lot of efforts to enlarge our offer at a very cost-efficient price, and this has driven our ARPU of TV because a lot of customers can afford it and are subscribing it. Very recently, and it is not yet in the figures of 2015, we have made an exclusive agreement with Studio 100, who is a very famous Belgian producer of kids program, and so we will bring in the near future what we call the Netflix for Kids program on our TV platform, meaning the Wanagogo, which will encompass both film, games, and music produced by Studio 100 with a very much appreciated content in the north of the country, and we will also bring it to the south of the country. This content was previously only exclusive at our competitor. Now we will have the exclusive access for this new Wanagogo platform. We have worked a lot in bringing the new technology to the customers, moving customer from ADSL to VDSL, changing the modems, changing the decoder, bringing them the latest technology. We have also invested a lot in our distribution. We have revamped a lot of shops. We are in the process of integrating fully the phone house stores into Proximus stores and integrating the company, which will also bring specific savings with it, so that we don't have to maintain two distribution networks, but we only go to one integrated distribution network. We have also invested a lot in simplifying all our products, moving our customers to the latest offers, and making sure that we are progressing well in digitalization, providing our sales team with digital tools, but also providing our customers with Proximus app with easy access to the web so that they can get e-servicing, e-billing, e-information in an easy and more personalized way. So if you see that on the fixed side, it results, I think, in extremely good customer growth. You see here some increase of our park into the internet space, into the television space. We give you for the first time ever our market share in Flanders. I know that very often you are asking the question. So far we were not giving these figures. I've shown you the national market share in the beginning, but you see here that over the last 2 years we have been able to substantially grow our market share in Flanders. To be honest, it is not easy. We have there a competitor which is a very professional competitor, and we are very proud to be able to grow our market share also in the north of the country. If you look at the ARPU trends, they are sound, they are growing very much on TV, even though we have given the TV replay functionality for free in our packs, we are still able to grow TV ARPU thanks to additional contents, foods content, movie contents, potentially tomorrow kids content that we are offering our customer, and this translates into, I think, nice revenue growth of 7.3% on broadband and 14.5% on TV. If we now look at the mobile side, I mean, there we have a strong growth in the postpaid area. You see that we continue to add substantial new mobile postpaid customer. We are growing the ARPU by 1.1% during 2015, growing the park, and what's also probably one of the first time we show it that explicitly, we show you the acquisition tiering, where you see that we have been able, over the last 2 years, to acquire customers much more in the high tier, meaning by that above 35 euro versus the low tier, where we have offer of 15 euro, which is, of course, enhancing the ARPU and enhancing the profitability of mobile. Prepaid is still, we are still losing customer in business, but the erosion in prepaid has been reduced, and we hope to reduce it further in the coming years, and this all translates in mobile revenue that are again growing in 2015, which was not the case in the previous year because we had the whole disruption triggered by the new telecom law, by the arrival of Telenet on the market, and you see that the mobile market is settling a bit in Belgium. Less volatility, so less acquisition, better ARPU, and more stable customer base. If you look then at the convergence side, which I think is the most important because we are less and less selling products and we are more and more selling packs and bundles, you see here as well that we have been able to increase substantially the number of household and small offices on convergent packs. You see here the splits of triple play, 4-play. We said 43% of our customer base is triple play, 4-play, but if you take people that are not in triple and 4-play, we have 56% of our customer base that are taking both mobile and fixed product at Proximus. If you look at RGUs and average revenue per household, there again you see quite nice figures where we are able to still increase the average revenue per household, but also increase the number of products each household is taking from Proximus. And of course, why are we doing that? Because we want to offer full solution, because we also know that the churn is significantly lower when people take all their solutions with the same company. What I said in the beginning, and is also very true for CBU, you see that all the revenue increase we have done we have been able to translate it in a very strong direct margin increase. So we have increased revenue with 3%, and we have been able to increase of direct margin with 3.1%. So a lot of efforts of the team to make sure that the growth is value accretive and translates into profit growth. So for the future, I mean, where we'll be focusing on, and I think somewhere we will continue on what we have done, which we call mobile-led convergence, so making sure that we continue to sell convergence, making sure that we offer the best mobile experience, and you know more and more people are talking about mobile first, and we want to make sure that all our services are first available on mobile and then available in all the other support. So it's a bit of change, probably versus the past, where it was very much fixed, and then you add mobile. Today we want to be available mobile first and to offer the rest on all the rest. Superior customer experience is still an area where we will focus a lot. It's a lot of effort. It's daily efforts to make sure that our customer gets the best services, but we are very sure that we can continue to improve that, and we will of course continue to improve into our brands, into communication, into the perception of Proximus being an innovative and modern brand that offer best solution to the customer, and Scarlett, which is the no-frill brand that offer best value for money to our customers. Here you see a bit the 4 pillars about how we want to develop our business on the mobile-led convergence, enhancing mobile solutions, I've talked about it, improve coverage also in the house and with our Wi-Fi hotspots, making sure that we deploy the latest technology, making sure that everything is available on app through My Proximus and mobile interaction, and make sure that we, through promotion, joint offers and other, increase the smartphone penetration, which is now 58% in Belgium, but still lagging behind some other countries. So we think there is still progression there. There is still progression in smartphone, but there is still potential progression in usage of our customers of the video and the data. TV, still very important for us. So after mobile, very much focus on enhanced TV experience with even more content, talked about one ago, making sure that TV is present on all the screen. What you see on your TV screen, you can enjoy on your PC, you can enjoy on your tablet, and you can enjoy on your smartphone with fully the same interfaces and the same functionality. And also making sure that if you have some proprietary content on your smartphone, you can easily enjoy it also on TV and share it with friends, family, like your video of the holidays or your photos of the holiday. You can swipe it on TV and make it a family moment. Within the professional market, so the small enterprise, the SOHO market, we will further develop this convergence, this mass market approach, but with a lot of extra professional services that are relevant for the small enterprise. BizSwitch is one that I've explained. We have also now just launched what we call PayABX in the cloud, so more and more affordable solution for small enterprise when they can enjoy the full functionalities of connectivity and potentially more and more ICT product as we offer to big companies, but in an easy way, in a cloud way, where they can buy it as a service depending on the number of people in their small enterprise. And as I said in the beginning, innovation is important. So there are 2 specific areas where we will focus on innovation on the consumer market. It's very much everything which is linked to security. How can we provide peace of mind to our customers where they know that their smartphone, their PC, everything is well protected from any hacking, where their data has been backed, so if they lose or their smartphone, they still have access to all the data. I think it's parental control is also one of the features in there. So quite a lot of focus on that security aspect. And the second one is everything which is linked to targeted advertising. We have more and more data analytics capacity, both on the mobile and on the TV screen. How do we use that to provide advertiser with much better targeted advertising, and how can we enhance our revenue by doing that? Superior customer experience, so the second big pillars, it's all about the distribution, the omni-channel, the making sure that everything is customer-centric. If a customer starts his journey on the web or on the phone or in the shop, we can make sure that we are aware of these various steps in the journey, and we can take the customer further on the journey without him having to restart is all explanation. We want to make sure the phone house shop will be integrated into the Proximus network, and we will have more and more personalization by using data analytics. Next to that, we see that we are able to really improve customer experience, moving customer on the latest technology, making sure that the technical intervention are not just technical, but they are also making checks into the house on the customer experience, on the Wi-Fi, on the usage of our products. And we have started it, and you see here that we have now reached figures like 87% of customer satisfaction for all our technical interventions, so strong work there as well. And we are more and more going to full install. So in the past, we tried to push do-it-yourself because we thought it would be less costly. To be honest, in the end, we see that a full intervention is much more profitable because everything is installed the best way from day one. We have higher customer satisfaction. You have less churn because people are satisfied and they can enjoy the best connectivity by our technician going to the house each time that they have a completely new suite of products. Further on customer experience, it's everything about the digital. So My Proximus app is now used by 640,000 customers. The purpose is to further increase that and give the power to the customer to take easily options, to reload easily, to make sure that they can look at their data consumption so that they can manage their bill as well. It's about making sure that we promote e-billing, e-servicing, e-shop, and that we are more efficient because we move everyone to the latest packs. We have been increasing very often price of our old legacy product to ease the switch to the latest pack so that we can clean the legacy of our product portfolio, easy the changes that we have to do in IT, and provide our customer with better service. And you see here some figures that we have achieved in terms of customers on latest pack, making sure that everyone had the latest decoder and can enjoy the best TV experience, and also making sure that we move the people to the latest solutions on mobile so that they there also can have all the experience of the 4G, the My Proximus app, and so on. Brand preference, I think 2 brands, very much the Scarlet brands, which is the smartest alternative, where you have a triple play offer at €39 and you have mobile offer from €8 to €28, and you can get additional 1 gig mobile data for €5. So a very interesting offer in terms of price. Of course, less services. You have no TV replay, you have only 30 megabit per second speeds, you don't have shops, you have to call or you have to do self-serving on the web. So in that sense, it's a less expensive offer, but you also have less added value services and less accessibility. On the Proximus side, we will really continue to develop more and more value-added services. We will not enter the trap of trying to match a Mobistar offer. We want there to continue the value track by adding functionality, as we have done with replay, with more content, with better network, with more services, and that's very much the strategy on our Proximus brand, continue to drive ARPU, to drive services, to drive revenue and profitability. Communication will be, of course, adapted, and you see we have started this year for the first time to do some different communication in the south and in the north of the country because the competitive landscape is very different, and you see also that has paid off because we are really now able also to grow much more in the north. So same brand, same proposition, but slightly different accent in communication in the two parts of this small country. So as a conclusion for the consumer business, it's very much continuing the good work that has been done in the last year, driving further the Proximus brand into value-adding proposition, making sure at the same time that we continue to simplify our legacy, our portfolio, that we have cost efficiency program very much linked with distribution channel, very much linked with simplification of our offer, and that the purpose there is very much to continue to drive growth, gain customers, gain market share, have more customers taking the triple and the quad play on our services, pushing convergence and making sure that CBU really remains a very strong pillar of growth for Proximus in the coming years. With that, I think I give the words to Bart van den Meersche, our Chief Enterprise Market Officer.
Thank you, Dominique. Good afternoon, everyone. It's my pleasure to give you a perspective on our enterprise business. And it's also my pleasure to confirm that 2015 was a very good year for Proximus, but also a very good year for enterprise business. And so we did so with a number of things, and I just listed here some items for 2015. So first of all, we signed important contracts with customers, or new contract with customers, as well in the corporate market as in the medium enterprise market, and you see some names on the slide, but also as well in the telco market as in the ICT market, and as it was mentioned earlier by Dominique and by Geert, more and more converged, more and more customers and contracts where we're delivering both telco and ICT. Also, we have been launching, again, new solutions in the market, as well in our traditional telco business with, for instance, Explore Intense, with even better SLAs than what we had before. But also in the IT and in the converged area, you see there Workplace as a Service, for instance. Workplace as a Service is a solution where we offer a virtual workplace that includes the computing power, the storage, the applications, the connectivity, the servicing, and that we offer as a service per user. You might know that we have this service for the Flemish government, where now today 18,000 civil servants are working in this on this virtual workplace. We have SME in the cloud, which is actually a virtual workplace, but for SME companies, so where we deliver the whole IT environment in the cloud and deliver it as a service also on a per use base. Engage packs, so here we bundle devices, being laptops, tablets, smartphones, together with connectivity, together with certain applications, and together with an insurance, for instance, and bundle that as a total package to our customers. We continued innovation, very important for us, because innovation, of course, is important for us to generate new revenue sources, but also, and I keep saying, also to become even more relevant for our customers. So we're driving and we're focusing very much on this innovation. Some examples, so we launched indeed the first commercial LoRa network, so long range, low power. So it's a specific network for IoT, so driving on or building on sensors. The big advantage is because we have already an important IoT, Internet of Things activity with machine to machine, but that was SIM-based. And so, for instance, we have road user charging that is being rolled out and will be applicable as of April in Belgium, where trucks above 3.5 tons driving on our highways will have to pay for the how would I say, the number of kilometers they do on the roads. So we're equipping all those trucks with an onboard unit that has a GPS and that has a SIM card, and so that is registering the number of kilometers. It's transferring it to a central data center where it's calculated and where the invoice is made. That is SIM-based. So what we had, but we were missing actually a piece of the puzzle in our IoT offerings. So we had SIM-based, but SIM-based needs a lot of power. So you have your smartphone, you have to recharge it every day almost. So we needed to have a solution that allowed us to have a long range but low power. And so that's what LoRa is about. So we can work with sensors that have a battery capacity of 5 to 10 years. and so that opened a lot of possibilities. Now, important in this context, and it has been discussed, is that we do not only deliver the connectivity, but that we deliver the intelligence with it. I always compare IoT with the human body. I mean, you have your senses. I mean, you can feel something. You have your nerves who bring that to your brain, and your brain does something with it. And that's what we are aiming for with IoT. So if you have a hot plate, you put your hand on it, immediately you will take your hand away. Why? I mean, it's hot, it goes to your brain, and your brain says, take your hand away. So that is what IoT is all about. It's about connecting devices with applications to make smarter business decisions. And so what is important is that we do not have only the connectivity, so we have the sensors, we have the connectivity, but we have the whole, what we call My Things tools, and that is to be able to very quickly activate a sensor, to monitor it, but especially to incorporate it into applications. And so that is something that we have been focusing very much. We're rolling out this road user charging, I mentioned it, for trucks. And we are continuously investing in our cybersecurity capabilities portfolio. We actually had a double-digit growth also in terms of our revenues for security. And of course, we also continue to work on our costs. And for instance, we have been able to reduce our non-HR expenses with 10% year over year. Now, if I go to these results clearly define or confirm our winning strategy and our mission. We maintain our mission, and I'd like to repeat it here. So it's be the nearby, reliable ICT partner that brings solutions to live better and work smarter, and that is easy to do business with. All those words are important for us. I mean, nearby, that's our brand promise, proximity. So we have a whole customer coverage with direct and indirect channel that is the best and the closest coverage in the market. Reliable. Every time when we do a service with our customers and ask them what is the most important requirement, each time business continuity. You have to make sure that our business keeps running. So we have this reputation of being a very reliable ICT partner with the best SLAs in the market. Solutions instead of products. So it's important that we bring solutions that are relevant for our customers. That's why we always, we are now articulating our products in a way that is relevant for our customers. That means if we talk to a retail customer, we talk about in-shop experience, we talk about digital signage, elements that are relevant for retail. If we talk to a finance customer, it's different. So that is very important in that approach. And then, so to live better and work smarter, and it is easy to do business with. And I'll come back to that with the Excite project that we have. Now, very often I get the question saying, how comes that in Belgium, as an incumbent player, you do better than a lot of other incumbent players in the market, in the enterprise market? My answer is always, what's the difference? It's us. But of course, just for this meeting, I also added a little. I gave you a little bit of differentiators that we are really leveraging in the enterprise market. And so each of them is important. So it's not one reason; it's a lot of reasons where we keep working on the right elements in order to differentiate us in the market. So first of all, of course, customer-centric. We want to be customer-centric in everything that we do. That means in terms of product solutions development, in portfolio management, in marketing, in sales, in organization, so very important. But also the way we, as I said, the way we articulate our solutions needs to be relevant for our customers. So we have horizontal value proposals, we have vertical value proposals. Horizontal are like business continuity. That is important for retail, it's important for finance, but then you have specific solutions that are important for specific industries, and we work on that in that sense. We're measuring each year our customer experience, our customer satisfaction with an external company. And also this year we have been, again, despite the fact that we have high customer satisfaction, we have been able to improve our customer satisfaction with 2 points again. Convergence, so we're working on this since years. So convergence, not only fixed mobile voice data, but also convergence, as it was mentioned by Dominic, in between telco and IT. If I take the traditional voice data or fixed mobile, so we have, for instance, one company number, which is, and it's how would I say, it's something that allows, it's a solution that allows you to have two numbers on your smartphone and activate the number depending on what you want. I mean, your professional number, your private number, and combine the two. Fixed mobile unification allows you to have a smartphone that behaves as a fixed phone on your telephone central. How do you say it? Telephony? PBX. So that is, but at the same time, we have conversion between telco and IT. I mentioned SME in the cloud workplace and as a cloud. I give you here as an example. So this year we have increased the virtual workplace solutions with 88,000 workplaces that we have delivered to the market. Best in market SLAs. So we're really focusing on SLAs as well in fixed, in mobile as in ICT. And each year we're trying to improve. I mentioned Explore Intense, where we even further improve our SLAs in the data connectivity. And so we're continuously working on those SLAs, very, very important for us. Not only working in it, but continuously improving our performance. So here you see 96 achievement of all the contractually committed SLAs. High quality networks, I think Geert has extensively covered that, so I don't have to cover that, but the best mobile experience, giving solid growth in terms of ads, in terms of net ads, but also have a very low churn. And then we continue to invest and accelerate our investments in the fixed network with Explore and then fiber, and I'll come back to that. We continue to invest on innovation, and here you see, for instance, what we're doing as an example in machine-to-machine. So thanks to this road user charging, we have now already 566,000 machine-to-machine connections in Belgium. But what is important also in the context of LoRa, you know, it's very important that we're developing an ecosystem of partners who use our assets, who will use our network to develop solutions, and we're certifying them on our solution. So we have been doubling the number of certified partners. So there's a lot of interest in this year against last year. And then, of course, cost optimization. So we continue to work on our costs. Here, an example is portfolio simplification. So we reduced the mobile options with 33%, and so we'll continue to work on that. And last but not least, of course, is the proximity. I mentioned to you, it's very important for us to be close to our customers. So we're working on this coverage model. There is not one company that has the same coverage model that we have here in Belgium. And so we continue to work on that and be able that we are close to our customers, that have the optimal coverage as well, direct as indirect with our channel. And continue to have offers that are close to our customers' business needs. I mentioned business continuity. This gave us a very sound revenue growth for 2015, and you see here that in 2015 we have been able to grow our revenue in total in enterprise by 2.1%. And you see that we have been growing in all areas except for the fixed voice, which is, I mean, I think I was almost going to say normal, but because we have, especially in the enterprise market, also we have rationalization of fixed voice, because a lot of companies are moving to voice over IP. There is rationalization of the lines, and so that is something that we take into account in our plans. Not only in revenue, but also in direct margin, and also in terms of EBITDA. Now, this is driven for a large part by mobile. So here you see that in mobile, and by the way, it says net adds in voice, but it's voice and data here. So the two blocks on the top are voice and data, and the other one is machine to machine. So we have been able to grow again in terms of park. So we have been able to grow our park despite the fact that we're already strong in the market and that we have high market shares. We have been able to further improve our market share in mobile. And you see the numbers as well in terms of number of customers as in terms of percentage growth. Also machine to machine, I mentioned, mainly driven in this case by the road user charging. But not only in park, but also ARPU. So we've been able to improve ARPU, mainly driven by mobile data usage. So the mobile data usage is clearly taking off. The smartphone penetration is clearly taking off. You have 4G, 4G+. So here we see definitely a growth in mobile data, as well national as international. So that brings us to a growth over the year in mobile services, a very nice growth of 5.6% for the full year in mobile services. But not only telco, but also ICT. So in ICT, we achieve a growth of 2.3% over the year, with IT solutions that enrich our telco solutions. So we always focus on what we call network-based ICT solutions that are close to our core business. When I talk about cloud, when I talk about collaboration and communication, when I talk about security, those are elements that are close to our core business. What is important also is that we focus on hybrid solutions, not only the traditional IT integration capabilities and activities that we had, but also more and more platform business. So that means if I talk about workplace as a service, it's a platform that we're offering that we started for the Flemish government, but that we now will offer also to different other companies. If I talk SME in the cloud, it's a platform business. So it's not a customized integration business that we do on site, but more and more we work on that platform business. Ensuring best-in-class business continuity also in ICT. And so I mentioned that, for instance, security we're focusing very much on security, and we achieved a double-digit growth in security also. Now looking forward, for 2016, we have actually for enterprise, we have defined 4 priorities, and we put them into I would say a motto. So we want to get into shape, to anticipate expected challenges, to innovate, and to excite our customers. And those are the 4 priorities that we're working on for 2016, and I'll dive a little bit in each of them. So shape is about getting into shape in terms of our portfolio, in terms of our skills, in terms of our costs, to be fit for the future. But of course, linked to and be customer-centric, customer-centric, customer-centric. Next is anticipate challenges, and challenges in fixed, challenges in mobile, challenges on new communication and collaboration, innovate based on Internet of Things, data analytics, and security mainly, and then excite, I'll come back to that. It's more about the business transformation that we're doing in enterprise to make sure that during every touch point that a customer has with us during its journey with us, they have the best customer experience. That's what we're focusing on. And I'll just zoom in a little bit on each of them. So first of all, shape. So as I said, shape, it's shaping our portfolio, our skills, our costs to become more customer-centric and get fit for the future. Customer-centric, I mentioned already several things, so each time make sure that we have solutions that fit the needs of our customers. For that we do co-creation. So with customers, we do user testing. We have what we call a customer experience stamp. Each time before we launch a new solution, we do the test that this is indeed in line with what customer wants, in line with customer convenience, user friendliness. So that is something that is very important. And then we have, as well as I mentioned, the value proposals like business continuity, smarter collaboration, innovation, and the vertical approaches towards different vertical segments, be it retail, be it finance, be it public, be it utilities, and have solutions that are really relevant for our customers depending on the industry segment that they are in. Cost control will always be a very focused element. So by digitizing and have online servicing, self-servicing, efficient sourcing, process improvements, and portfolio lifecycle management. Anticipate challenges. Indeed, we expect 2016 to be a challenging year, but we are ready for it in a sense that, first of all, in fixed, as already mentioned by Geert, at large, so that we are accelerating fiber to the business because we see. So what we want to do is anticipate upcoming challenges to meet or that are initiated by competitors, by regulation, and by changing customer behavior. We see indeed that more and more customer needs higher bandwidth. Not only higher bandwidth, but also very often better latency. And so it was mentioned, for instance, Belfius was mentioned, but ING was mentioned. So we're connecting all the different agencies of those banks with fiber because they want to have digital interaction with our customers. So they want to do video conferencing. They want to do a number of more advanced communication and collaboration activities or tools that need higher bandwidth and need higher or better latency. Of course, cloud computing, more and more customers are using cloud computing. That means you need a very good download speed, but you also need a very good upload speed. And so here again, cloud fiber is a very good solution. So we're accelerating for the enterprise because there the need for capacity and for bandwidth and latency becomes more and more important. So that's for fixed. In mobile, We expect indeed some changes, and we know that, I mean, Telenet and Base are going together. Mobistar will lose a number of customers to Telenet Base. So we're getting ready for that battle, but we're getting ready by one, making sure that we have the best quality network and the best mobile experience, as Geert has told you. But also we're focusing in again very much on servicing, mobile managed services, where we commit to SLAs also in the mobile environment, and so where we do mobile managed services, where we do mobile device management, where we manage the whole fleet for the customer, activate, deactivate, all those different. So really bring the service and not only just the mobile connectivity. That is definitely. Next to that is of course the roaming. So roaming is going to have an impact, of course, in 2016 and 17. So as of April of 2016, we will only be able to invoice a surcharge, and as of June 2017, there is no roaming in Europe anymore. That has an impact, and I think Sandrine will come back to it later on. But what we're doing is, how can we now take this as an opportunity to boost roaming? So because now a lot of people, they are afraid of roaming, and they block their smartphone when they go abroad. So here we are reworking our portfolio to have the right solutions depending on, how would I say, the customer profile. Customer profile in terms of travel frequency. Is it someone that travels for a day, for a week, for a month? In terms of destination, what destination does he go to? In terms of communication needs, is it voice, is it data? So we're working on peace of mind, because today there is still a lot of customers afraid of roaming because they are afraid of a bill shock. So we're working on tools that give them the possibility to see where they are in their utilization, their usage, and so that they have peace of mind. But also we're anticipating, so we know when customers are abroad. So if we can contact them with the right solution, depending on their profile, we will by doing that, we will definitely try to balance this roaming regulation impact with higher usage. And then we have new communication and collaboration tools. So here we're talking about the new communication and collaboration. So next to voice, so we're talking about instant messaging, presence, video conferencing, voice over IP, of course. So more and more we have our customers that are moving into voice over IP. Enriched voice managed services. Here it's combining fixed and mobile, and making sure that if there is a problem on fixed, that automatically calls are rerouted on mobile, or the opposite. Call control, so PBX in the cloud, so having solutions with a full PBX functionality also available for smaller companies, and then further focus on conversions. I already gave several examples in that context. Innovation, I mentioned to you that we're focusing actually on 3 areas. Internet of Things, so where I said the objective is to connect objects with applications in order to make smarter business decisions and develop new services. Data analytics, it's all about translating captured data into new insights so that you, again, make smarter decisions and can develop new services. And security, I think I don't have to convince you of the importance of security, physical and cyber security, and that is an element of innovation. So in order to make the presentation a little bit lively, I decided, and also a good manager needs to be able to delegate. I'll do this with a video instead of a presentation. So if I can just, for the innovation part, have the little video rolling out. Thank you.
The world is transforming into an open digital economy driven by applications, ecosystems, and communities. Proximus needs to innovate permanently in order to keep playing an important role in this. Proximus does not have the ambition to become a software company. However, we have interesting assets that, when used by partners, can be very profitable both for the customers and Proximus. For example, credit card companies can perform a location check of the credit card owner's telephone via our location-based services asset in case they suspect a fraudulent online transaction. By doing so, they reduce their risk of fraudulent transactions and offer a better security to the credit card owner in case of online identity or physical card theft. To make it easy for partners to integrate our assets in their solutions, Proximus develops a self-servicing platform where partners can pick and choose the assets they want. Another key element in the next industrial revolution are the Internet of Things. If predictions come true, we'll see around 80 million objects connected in Belgium alone by 2020. Already today, the first application cases are being implemented. Road user charging for all trucks driving around in Belgium, connected parking places, smart buildings, vending machines and meters, etc. Proximus has the right assets to play an important role in this ecosystem. We were the first to launch the LoRa network for the Internet of Things. This network is specifically designed to provide objects such as buildings, machines, cars and household appliances with sensors and connect them with the Internet. We are also developing our capabilities in near real-time data analytics. There is much intelligence on our mobile networks, and this can help our customers to make better policy decisions. Some interesting applications can be found in the smart city concept, where we have a positive impact on the quality of life of citizens in cities and towns. For example, for the city of Namur, Proximus provided consolidated anonymous data detailing who visited the city and when. We know from which region or even which country they come from. This enabled Namur to make the best decisions for its mobility policies. Our security portfolio will also be adapted to answer new threats that emerge from new technologies. Amongst other, we will build new adapted solutions to assure the secureness of the Internet of Things, and we will further develop city surveillance solutions.
All right, so that was the third priority. So first was shape, get into shape for the future with a high focus on customer centricity. Second was anticipate challenges, as well in fixed mobile as communication collaboration. And then the third is innovation with a focus on IoT, security and data analytics. And then, of course, linked to that, what Geert was talking about, the enabling company, where we will open up our assets towards an ecosystem of partners who can use our assets and have more and more Proximus inside. That's what we're aiming for. And then the fourth priority is Excite. And so definitely not the last one, so the less priority one. So Excite is all about, as I mentioned to you, making sure, and so our ambition is to have the best customer experience in every touch point that the customer has with us. That starts with the commercial track, ordering, provisioning, the billing, the servicing. So in all the tracks we want to have, and it's an ambitious goal, but we really go for that. So we have planned the required investments also to do that in our budget. So that is Excite, but next to that it's end-to-end servicing and ICT industrialization. So I have three elements in Excite. First is the business transformation. So here we want to redesign our portfolio, our processes, and our IT landscape to do what I was just saying. I mean, have that best customer experience. End-to-end servicing. So we're already very good in SLAs, but we need to become better even in converged offerings, where we combine fixed, mobile, and ICT. And so that's where we are focusing on that end-to-end servicing. And then ICT industrialization. Here it's a methodology to deliver telco and IT in a industrialized, standardized, modular way. So that is instead of doing one of a kind, making sure that we have more and more standardized solutions with a customized layer on top of it. And that's the three elements that we're investing in for ICT industrialization. So in conclusion, by shaping our portfolio to become even more customer-centric, anticipating upcoming challenges initiated by competition, regulation, and changes in customer behavior and customer needs, increasing business value and relevance for our customers through innovation, and by exciting our customers by having the best customer experience in every touch point, we really are confident about our future, and we're really, committed to deliver that best experience to our customers also in enterprise. So now I have the pleasure to introduce Daniel, who is going to give you a perspective on our BICS business. Thank you.
Good afternoon, everybody. So now we are leaving Belgium. And we start by reminding you, in a nutshell, I mean, what BICS is about. And when I talk about BICS, I used to use 4 words that you can see in the middle of the slide. Is wholesale only, international only. So we sit behind the communication service providers. And we deliver interworking and interoperability solutions made of voice, infrastructure, and a suite of mobile data services, as you can read. So that's our ID. And what we've been doing for the last now 4 or 5 years is to complement the core transport services that you see on the bottom with value-added services that give value for money to our customers, and that on one hand generate new revenue for BICS, and on the other hand retain and stimulate the core business. So I just give 2 examples. The one you see on the left is the BI, is the smart. What is the smart? The smart is a tool that gives our MNO customers a 360 view on its roaming business that we can provide, because the roaming is flowing through our network through the signaling service, where we estimate, by the way, that 25% of the worldwide roaming passes through BICS network. On the fraud and security, for instance, fraud guard services, what it is a crowdsourcing service whereby when we detect fraud somewhere in our network with one of our customers, we inform all the other customers of the fraud happening so that they can block it before it would touch the network. These are only 2 examples of what we do, so really value-added services on top of the transport. Little bit over the competition. This business is a highly competitive business, especially on the voice side, which is still a very fragmented market. And actually, we have 2 types of competitors. On one hand, we have the wholesale divisions of big telcos, international wholesale divisions of big telcos that do similar business to ours, like Orange, which is very active, for Vodafone after the takeover of cable and wireless. And those guys, they leverage on their footprint and their customer base to go to market with a wholesale offering. And on the other hand, we have global companies, more focused companies, that are really only focusing on these type of services, either wholesale or enterprise. And on a global scale, or 2 main competitors globally in the world are Tata Communications of India and Cineverse Technology, which is a Carlyle-owned private company which is very focused on roaming and mobile data service. So that's the competitive landscape in a nutshell. And in this landscape, our USP that have enabled us to build a world leader, because we are number 2 or 3 in our core businesses. Well, there are 5 main ones. First of all is the customer base. We serve over 1,000 customers. Again, it is wholesale, but we have a tier 1 mobile customer base, a GSM customer base with more than 400 mobile operators connected to our network, buying from us 1 to 10 products. So we provide the unrivaled reach to our other customers, again, to reach other operators. We have extended that to the OTTs and the MVNOs, which are the growth engine for us. We are a neutral hub. That's very important. We provide hubbing services. We are a voice hub. We are an SMS hub. We are a roaming hub. So versus the big groups, right? We are our European shareholders, Proximus and Swisscom. We don't compete with our own customers. We have a very cost-effective delivery model. It's 1 factory, 1 network, 1 sales force, 1 delivery engine. So that provides very cost-effective model. we are privileged to be a very healthy company, and that has enabled us, again, in a fragmented market, which is very much called for consolidation. We are one of the only ones having already successfully completed 2 consolidation transactions with a JV with Swisscom and takeover of the carrier business of MTN of South Africa. So these are our USP. If we translate that into the financial performance, I mean, the key characteristic of our business, first of all, you need to know the core transport business is highly commoditized. It's all about scale, and it's a margin-driven business. Okay, we don't drive the business with revenue, which is quite easy to understand. I mean, we charge to our customers, we charge termination rates plus our margin. So MTR or fixed termination rate plus our margin. So that means when in a big country the MTR goes down by so much %, it has an immediate impact on our revenue, but a much smaller impact on our margin, which is really the value that we generate. So we manage the business on margin. So what is impacting the revenue is the voice. Of course, the voice volumes and destination mix is also, in our case, foreign exchange, because 40% of our business is in US dollars. So, of course, 1 year dollar is 1.25, this year is 1.1. It has an impact as well. So that impacts very much the revenue and, of course, the growth we enjoy on the non-voice, but which is, from a top-line perspective, only 15%. On the direct margins side, well, the voice business, it's not a growing market anymore. It's a business where we still have volatility. You can see it on the upper slide. You see the direct margin generated from the voice. 2013, 140, 14, 118, 15, 133. So it's strong margin management, but there is volatility. The good thing about that slide is, as you can see, now the non-voice from a margin perspective generates more than the voice, which is the result of a very, very long-term strategy started a long time ago. 10 years ago, it was 85% voice and 15% non-voice. And now the non-voice has exceeded the voice. And on the OPEX and CAPEX, what's the message here? Well, on the OPEX side, we, and Dominique touched that briefly, we are spending a bit more on HR because we are moving into more complex services that are more labor and intensive. So that is impacting the OPEX line, again, slightly. And on the CAPEX, well, the good thing about our business is an asset-light business with a very low CAPEX intensity, which means that the cash conversion is quite high. So even with a low EBITDA margin against revenue, we have a very high cash conversion. As you can see on the slide, we have recorded our best year ever in 2015 with great margin management on voice, growth on mobile data, of course, favorable Forex. But in 2016, we're going to keep investing in resources to further diversify the business and grow it sustainably. What are the opportunities for BICS? Well, I mentioned 4 here. First, of course, the market evolution with the growth of cloud communications and cloud communication provider and the famous disintermediation that creates new potential customer segments for BICS at a time where the borders between wholesale and retail are a bit blurring. And so that is a natural extension of our business. So we started with the traditional telcos, then extended to MVNOs, where we are a leader, OTTs, now moving to the cloud provider and API. So we want to open our network to application developers that need reach. Okay, and for that, we are investing in completing the portfolio to be completely relevant to that segment. IoT, why IoT? Because, of course, we have a big role to play in the roaming scenarios of IoT and machine-to-machine, and we are already active looking into this. Big data, as I said, we have a lot of information passing through our network with the signaling, voice messaging, and we can use that information to provide business intelligence to our customers. And, okay, like for BART, fraud and security, again, with all the information passing through the network, we work on authentication solutions and stuff like that, especially for the OTT cloud segments where there is a strong need for this type of services to secure the service they provide to their own customers. So when you look at the overall strategy, well, the good thing for us is that we can develop the business across 3 dimensions: the products, the segments, and the geography. So the segments, as I said, extending to cloud providers API. Geographies is further push in the regions where we have a lower market share. Today we are an undisputed leader in EMEA, and we are investing a lot to grow our market share in Americas, in Asia, where there is still a lot of growth potential. And products, as I said, further diversify, completing the portfolio towards these new segments to generate the new revenue and be relevant. So I guess with this, I have covered the big piece, and I'm passing the word to Sandrine for not yet, yes. Yes. For the numbers.
Good afternoon. Last part before Q&A. I'll go through the numbers. We've said a lot already. Just to recap on our Q4 performance, our revenue grew at the core perimeter by 0.5% year over year. That's slightly decreasing at the group level. I think Daniel highlighted that we had volatility in our voice business over Q4. But what matters is the margin. And on our core business, you see the contribution of our consumer segment, our enterprise segment, and on text that the wholesale erosion largely explained by the phasing out of Snow, which was the triple play offer of Base, which was stopped. But we captured most of this customer on our Scarlet offers, which is in the retail revenue. On our EBITDA, growth of 8.4% for the quarter, strong contribution from our consumer segment, our enterprise segment, helped in the tech by the seasonality effect of our tax on pylon. Remember, it was fully provided for in Q4 2014, while it was spread over the full year in 2015, and small growth from BICS. That explains the 8.4% growth. For the year, it's 4.9% at the level of the group. We start to see the benefit of our cost initiatives, 20 million cost decrease, 2013 and 2015. But as was expressed by my colleagues, and looking more at our costs, most of it is ahead of us. We have an ambition to realize 260 million euro gross savings over 2015-2018. And that's a company-wide, very detailed initiative. You saw some of it through the presentations of my colleagues in network, in enterprise, in CBU as well. But there's a very detailed 3-year plan, initiative by initiative, which is locked in our 3-year plan. And it's about agile organization and productivity. Of course, this is supported by the voluntary early leave plan, on which we have an agreement with our unions and which was announced this morning. But we will be able to reduce our cost in support function. We'll be able to optimize the distribution channels. We'll move for more productivity gains, the network simplification that Kate has explained, ICT industrialization, automation, process optimization. That will be helping us reducing our cost. And there is also a huge program on what we call bad volume deflation. And this is really about what was described in improving customer experience. By doing so, we are able to make sure that we do not send our installers twice. We reduce the call to our call centers, and we have a strong ambition here to reduce the bad volumes and to support this cost reduction. And of course, digitization is a major driver in our cost decrease as well. It's not only about e-billing, it's also pushing web and mobile as an e-sales channel. It's also promoting e-servicing with self-care, and that will support the gross 2015, 2018, 260 million savings. Of course, in front of this, we have costs which are going to increase, and I would categorize this in 3 different buckets. One is really volume-driven. As we grow our customers, we'll have some costs which are directly linked to the customer installed base. Capacity-driven as well. Some of our maintenance contracts are hugely capacity-driven. That will increase. And the mobile spectrum license as well, which is driven by the expansion of our customer base. That's one bucket. Second one is that we have some new taxes which are impacting us coming over the next years. Electricity, real estate, we cannot do without them. And the last one is what I call the automatic wage indexation in Belgium, which we expect to come over the next 3 years. It's not fully, the timing of which is not fully secured, but we anticipate that this will have an impact on the cost of our wage. And we'll hire on top of this decrease of our workforce in the, through the voluntary leave, early leave plan. We'll have to hire new skills to support the future businesses in data analytics, in digital, in IT, that Geert has mentioned. But as a whole, have this in mind, a very strong ambition in decreasing our cost, and that's key to support our long-term ambition for EBITDA growth. We continue to invest in excelling customer experience. I think it was largely explained to you by Geert on the network, but it's also on top of the network enriching our content. And when you look at the balance of our CapEx portfolio, you see that we will decrease in 2016 the size of our CapEx in mobile. 4G is largely rolled out, and we'll focus more on the fixed portfolio with the acceleration of fiber to business. And that explains why we are increasing our CapEx in 2016 up to 950 million euro. Cash flow, we've shown on this slide the conversion of our EBITDA to cash flow, both 2015 and 2014. We ended the year at 408. Remember, we had to pay 120 million to settle the past. That was on the mobile litigation that impacted our Q4. Before that, so our CapEx is higher than 500. Whereas in 2014, we had the benefit of disposal of companies in the Telecommunications France, but disposal of buildings as well. That explained and that helped the cash flow in 2014 with 180 million. And so that's why comparing both years, one big plus in 2014, one negative in 2015, when we remove these two exceptionals, I think it's much more comparable. However, keep in mind that in 2014, we had also an exceptionally good contribution from the change in working capital. That was not possible to repeat this in 2015, so we had higher cash CapEx and a smaller contribution from our working cap change. Talking about working cap, I think what I wanted to share with you today is that we have launched a transversal cash management initiatives throughout the company. We have decided to really focus on all actionable initiatives that can support managing the working capital. That's first with the objective to make sure that we can smoothen and improve our capacity process in the cash flow aspects and avoid huge volatility, but I think most importantly, to make sure that we optimize a long-term sustainable level of free cash flow. And to make sure that this initiative is well understood by the entire management of the company, this is now part of the short-term incentive plan objective. It's not anymore EBITDA minus CapEx, but EBITDA minus CapEx and change in working cap so that everyone moves in the same direction. And we see some first tangible, positive results of such initiatives, which was launched mid-2015. In the key metrics, so account receivable, we've managed to improve our DSO, decreasing them by 6%, and that's about managing the cycle of billing, managing and improving our collection process for some of our customers. Inventory as well, we've done a great job of making sure we have a better forecast management of our devices and tying this to the expectation of marketing and making sure that we're really driving this so that we keep our inventory level at the lowest level possible. We've dealt as well with our vendors, making sure that the inventories are flowing rapidly in our barns, and also better invoicing quicker, some very long-term projects, rather than wait till the end of it. And on the account payable, we are working, of course, within market condition to try and optimize this as well. So we've improved our DPO, extended them by 8%, and I think there is still some potential to improve on these various metrics. So this is what we'll be busy with this year. So we have a very good and sound financial position. We ended the year with 1.9 billion net debt, comparing to 1.8 at the end of 2014. So just basically, we were able to cover our dividend with our cash flow. The only growth in our net debt can be explained with the 120 million exceptional litigation settlement that we had to pay in 2015. So apart from this, our debt was fairly flat, and we were able to cover our dividend. We also extended the maturity of our net debt by repurchasing some short-term bonds and issuing a 500 million euro notes on 10 years that allow at very good condition and that allow us to push our debt maturity, and we have a very strong rating. So looking at this year in terms of financial guidance, we are still in our Fit for Growth strategy with the ambition to grow at a profitable, to sustain our profitable growth, both in revenue and EBITDA. So we have guided with a slight growth for our core revenue and with a slight growth as well for our group, so group total perimeter EBITDA level. And I think it's important to highlight, and I think Daniel showed this earlier, that we are comparing with a very good 2015 BICS results. That's one aspect, but also in 2016, we are going to have a new competitive environment, so difficult to say how it plays, but it's new environment. And also the end or the staged end of the roaming like at home, a first step hitting at the end of April this year in the roaming, and we've refined our estimation of what impact it could have on our EBITDA. We assess it's max 28 million euro. We hope with the strategies that Bart has described that we're able to improve and play on the elasticity of our volume, but that's just to give you an idea of how it can be a headwind in our EBITDA. And on CapEx, as was said, 950 million euro for 2016. And last on the dividend, so we confirmed our 2015 dividend, 1.5 euro per share, but also our board yesterday confirmed the intention to pay out a stable dividend for 2016 as part of the 3-year plan, which was announced by our CEO 2 years ago. And I think it's the end of the presentation, and I would invite all my colleagues to join me to answer your questions.
Thanks very much. It's Ulrich Rate from Jefferies. Maybe to start with 2 questions. If I look at your outlook in 2016, is it fair to say that the revenue growth isn't necessarily driving the EBITDA growth or operating leverage, but it's really more the incremental cost measures that sort of drive the EBITDA growth. And the reason I'm asking this is because I think during 2016 you highlighted several times that part of the revenue growth you're seeing isn't from particularly high margin, from high margin activities. The second question I have is on the capex increase in the outlook for 2016. If I understand this correctly, and just see whether this is your thinking, this isn't a project to leverage a particular opportunity. It is really the reaction to a competitive action that you feel you have to sort of oppose, and that incurs incremental cost. Is that the right way of putting it? Thank you.
Perhaps I will start answering the question. I mean, the EBITDA growth will be triggered by revenue growth. So, I mean, it's very clear that we have been able to grow our customer base, to grow it profitably. We have shown that we have been able to grow the ARPU on most of our products. So the purpose is really to continue doing that in 2016. I think what we have highlighted is that we have probably a bigger opportunity of growing EBITDA versus revenue by making sure that we can reduce our cost base. So I think underlying revenue growth will continue. There will be a slight negative effect on the roaming that we have highlighted of 28 million. So somewhere, somehow, you will need to compensate for that in the revenue. But if you take that apart, we will certainly continue to grow revenue with the same ambitions as we have seen, or at least on the core business, in 2015. And the EBITDA, we will need to get some of the EBITDA evolution through direct margin, compensating the roaming headroom, and also more from cost reduction to make sure that we can then finance the capex. To come on your capex question, but I mean, my colleagues can of course jump in. I really don't think it's a consequence about what competitors are doing. I think we have now for many years a very sound strategic objective in terms of investments is making sure that we can offer the best experience to our customer, an experience that is also relevant. So I don't think we need to offer every customer in Belgium a 1 gigabit connectivity, because today they don't need it. So I think what we try to do is to look at the evolution of the technology, use it in the most sensible way to make sure that we can provide the experience where it is relevant. And that's why we say for enterprise, we see that there fiber is becoming more and more relevant. Why? Because you see more and more enterprise going into cloud application. And for cloud application, what is important is the symmetry that fiber can offer in download and upload, because if all your data and application are in the cloud, if you work from home, for instance, you need to download, but you also very much need to upload, and also latency is very important. So that's why very clearly our focus on fiber to the business is driven by customer needs. I don't think any of our investments is driven by competition.
Hi, sorry, Max Hallam, New Street Research. On the capex again, are you able to give an indication of when this might reach a peak and start to tick down? And then over the sort of longer term, are you able to give an indication of normal maintenance level capex? And secondly, if capex is likely to remain elevated, is the dividend sustainable with that level of free cash flow with higher capex?
So, in terms of long-term projection on capex, if that's your question, we do not anticipate, I mean, that it will decrease short term. I think if we want to accelerate fiber to the business, it will not decrease before some foreseeable 3-year plan. But we can certainly sustain the dividend and cover the dividend. That's the ambition, to generate enough growth in our EBITDA and free cash flow before capex to make sure that we fund the capex and also have a sustainable dividend distribution.
What I think to add to that, what I think we have always said in the past is that what's important for us is the return on investments we can get from the investments. And as long as we can see that we get a decent return on investments, we have also the financial ability to do these investments. Because for us, what's important is how much value creation long-term we can generate for our shareholders if at some moment we see that we can get long-term return, and for that we need to use some of our balance sheet power, we would do it. I don't think today it is foreseen for this year, but this is really something that we have always been quite explicit upon, where for us it's about return on investments.
Thank you. Nicolas Cote-Colisson from HSBC. I've got a question on your 4-play ARPU, because on one of the slides you were showing some growth for the full year, but in Q4, 4-play and triple-play ARPU was down. So I was just wondering what was coming from the larger bundles in mobile you are offering now, part of the packs, and does it indicate a kind of difficulty to monetize data usage? And what should we think about that in 2016? So for triple play and quadruple play ARPU, can it grow again in the full year 2016? And just to follow up on the CapEx question, I was just wondering what was the split in the set-top boxes or more the modems in the field, and how much do you will have to swap in the coming years just to go alongside your upgrade path for the network? And a last one, what would it take from a network point of view to eventually get a complete virtualization of the modem?
Okay, so a lot of questions. I'll try to give you an answer on the consumer business, although I'm not the specialist anymore. So I think what you see first is some tactical stuff. We have put TV replay in the packs, which used to be monetized, so that's certainly a mechanical effect that you see in the ARPU of the triple and 4-play. A second element that you said is indeed that we have increased some data bundle on the high end, and there you see some time lag between the moment that we offer the data and the time that customers are using it. So that's certainly one of the elements you see in Q4. We are for that quite confident that this time lag will not remain in 2016, because you see that customer, the more they use data, mobile data, we try really to give them more and more ability to control what they use through the My Proximus app, and we really see months after months an increase of data usage. So I think that's very much a timing difference there. I think growth in 2016 on our triple and quad play will be there. We have done a small indexation in January, so that will certainly help. We have increased the data allowance in our mobile in August, so that will also, in the second part of the year, not be present anymore. And I think the challenge will be to see how we can bring people more into roaming, into higher tier, into bundle. But I'm confident also that, for instance, on the TV, with the food offer, with the Netflix, but also with the upcoming kids offer and other, we will be able to continue to grow the ARPU of the mainly the 4-play, but also the triple play.
Maybe then on the two other questions. So if you talk about customer premise equipment, you have two things, of course. You have the home gateway, which is the modem, and you have the set-top box and the decoder. For the home gateway, I can tell you, so we have already our vectoring rollout 43%. On the home gateway, our rollout is already done 50%. That's on the latest capability. With respect to the decoder, in fact, we're much further ahead, and 85% is done. Second thing that we have done on virtualization, in fact, we did already do some kind of virtualization. For example, the new box that we have in the home has no need for a hard disk anymore, because everything is brought into the cloud. Now it is clear that we are still going to make our boxes in the home thinner and thinner. And what that means and what that requires is that we bring more intelligence and more capabilities into our cloud. So that is a track which is ongoing, and by 2017 we will make again a kind of step change. and which gives us then the ability for further faster time to market and, of course, reduced cost on the CPE equipment itself.
Thank you. Dimitri Kaniatis from Redburn. Just two questions. The first one, going back to the B2B, I mean, as you've highlighted, you are doing much better than some of your peers, especially across the border. Just wondering, one of the things probably that helps you is that you don't have, there's no nationwide cable operator, and the mobile operators have got very limited, if any, fixed infrastructure. Do you see any risk coming from the merger of Telenet with Base? I mean, do you expect them to be a lot more competitive? And my second question is regarding consumer and regarding content. I mean, you've highlighted that you're doing very well in terms of TV, you're aggregating a lot of content, but we are seeing some of the telcos now changing a bit their strategy with respect to content and actually buying exclusive contents, especially in terms of football in lots of countries, or producing more of their own content. Is it something that you would consider as well, being a bit more aggressive on the content side? Thank you.
Come to your first question. So in B2B, it is true that we don't have today in Belgium a nationwide cable operator, but they're working very closely together. So quite honestly, there's not so much difference. But it's true. But I think again we start from our strengths. We are the only operator that have a full national coverage in mobile, in fixed, that have the IT integration capabilities, that have the data centers, and that's what we're working on. So again, I'll come back to the differentiators. Even if tomorrow we have a nationwide cable operator, I mean, we will definitely keep working on those differentiators that I was mentioning to you. But it's an element. And so if you have asking, coming back to your question, Telenet Base, when I said anticipate challenges, that is one of the challenges that we're looking into. It's true that at that moment in time, so Telenet will be a convergent player also, having fixed and mobile. And it's not a secret. I announced clearly that I will target the enterprise market. And so we're getting ready for that. But again, based on our differentiators, I mean, for SLAs, servicing, all those different elements that I mentioned in the presentation are going to be very important. Each time when we have, for instance, if we have in mobile, because if you look into mobile, there we have two players who are nationwide. So why do we have the position in the market that we have today? Not because we're the only one that are nationwide, but because we have the quality of our network, and that has been mentioned today, because we have those services that we're building around the solutions, because we're committing to SLAs that are the best in, and this is what makes a difference. So even if tomorrow I have a nationwide cable operator, okay, we'll deal with it.
And on your content question, I think it will be a mix. I think we have been able everywhere where it was possible to get non-exclusive content, to provide content at the right price. We have done it. We've taken on board Netflix. We have opened the deal with ESN. Very recently, we have done 2 exclusive content deals, but it's very much local content. And I think there you can make a difference with exclusive local deals. We have done one on football. It's a very strange system in Belgium. You have the Prime League, the Triple A League, and you have a kind of second Prime League where we have now renewed for 4 years the exclusive right to send those matches on Proximus TV, and even the league is called Proximus League. The same is true with what I explained on the Wanagogo Studio Honor, which is very specific Belgian kids program, which are very relevant, and the agreement we have done with Studio Honor on Wanagogo is an exclusive agreement where we will be the only one to exploit the Wanagogo platform. So I think where it's relevant, where it's local, so where very often there the costs are affordable, we will go for exclusive. Where it is about big international content deals, which are very expensive, there we will try to see how we can more leverage non-exclusive deal to really have an offer to our customer that is affordable and brings the best of the content to them.
Yeah, hi, it's Michael Bishop from RBC. I just had 2 questions, please. Firstly, you mentioned on one of the slides that the mobile mix in CBU was improving. But if I look at the 4G data usage, particularly in Q4, it looks like the growth is a lot slower than the data usage growth across the board. and it's actually just below 1 gigabit. So I just wanted to put those two data points together and ask the question really that if the mix is improving, is it people buying more but still optimizing through Wi-Fi offload? Or do you think, given there's a lot of people on the €15 tariffs in Belgium where you get 1 gigabyte, that people are reluctant to spin up at that price point? And just wondering what you see the outlook like in 2016 for that dynamic. And then secondly, on the working capital, could you give us any sense of how much more improvement you could achieve? Clearly, quite a lot's been done already. Thanks very much.
Okay. So on the first question, it's true that the people in Belgium are not yet doing a lot of data usage. I think smartphone penetration has been lacking behind for many years. We have just reached the 58%, and that somewhere we try to provide them with a bit more abundance to give them peace of mind. And that's why I explained there is a time lag between what we offer and how much they use. On the other end, if you look at people with higher bundles, they are using much more. So there is a big dichotomy on the average that we publish, and some people that are going to a higher bundle, that have 4G, and that are really consuming a lot of video. So I think the whole trick is how can we enlarge the basis of customers that are really using video through mobile in a peace of mind state. And that's about providing them the right speed, providing them the right device, providing them tools that they can control their usage. And I think we'll get there. It's just a question of time, and we'll be able to grow the data usage. We see it is growing. Here they've shown a slide there on the 4G, the data usage is 3.7. We see that 4G data usage is already higher than 3G data usage, so this growth will come. It's just a time lag.
And on working cap, I'm confident that we can improve some of the metrics because some of the initiatives are very recent and have not paid off yet. Well, as you know, any working capital initiative cannot go to the sky at some point. There's so much that you can do, but we still have opportunities ahead of us, and our aim throughout the year is to absorb part of the many growth factors that we have by managing cash better.
Thanks very much. Daniel Morris from Barclays. I have a couple of questions, please. The first is on the mobile space and the impact, actually, of the Mobistar entry into cable wholesale. If you talk to Mobistar, they talk about, up to half of mobile consumers buying their product in a fixed mobile bundle. And I wonder, what do you expect the impact from that to be on the mobile market? Will it get much more competitive? Are you seeing the same kind of things? The second question is for Geert on the future network strategy. You're obviously pushing this idea of moving the fibre closer, making the copper shorter. I think the technology is all there, it all works. But you've obviously got this kind of exponential explosion in the active data components, active components in the network. Is there a risk that you see a big spike in the costs on the back of that, or can you control those? Thank you.
Okay. So on Mobistar, I think what you see is Mobistar now is more entering the fixed area. By the cable opening, they come with an internet TV offer that is only available to their mobile customer. I think if you look at it, it's much less disruptive than I think a lot of analysts had anticipated. They come with an offer which is for the big majority of their customer, €49, just for internet and TV. If you add to there the lowest mobile offer of €15, you already come to €64. If you look at a similar offer, if you look at Scarlett, for instance, we have a triple play at 39. You can have a mobile at €8. So you have there a better offer with also fixed, with a much lower price. And if you look at Proximus, just TV, internet, and mobile, you are at 67. So you have a €3 difference between a much better offer on Proximus, where you have replay, where you have TV app, where you have potential upsell of bundles of football, Netflix, and other. And on top of it, if you want to go from Proximus to the new Mobistar offer, you have to pay a once-off cost of €150. So I think to that extent, are not so much expecting a huge impact of the Mobistar offer on our network. I think they are very prudent. They have entered now a few regions. It's about 6% of the population. If you look at the Mobistar mobile penetration in these regions, you talk about 1.5 to 2% of the Belgian population. So it's extremely a small number of people, and even if they have some success with their offer, which I think they will have some success, it will probably more be cable to cable than Proximus to Mobistar. So will that give them some traction on their mobile offer? I don't think so. We have been trying in the past to use sometimes our mobile strengths to sell fixed. It's extremely difficult. We see that it's much easier when you have fixed customer to upsell them mobile. It's extremely tricky to upsell fixed on mobile. I mean, we have gone through that and we have not found the key. So perhaps Mobistar will find the key, but so far we have tried for several years and we haven't found the right key. So I think it will be much less disruptive than any one of you could have anticipated.
Then with respect to your other question that we bring more equipment in the street. First of all, on the GPON architecture, this is splitters. Splitters are not active equipment. This is pure passive equipment. That is one. Second, with respect to the FTT, the fiber to the curb densification, in fact, the innovation work that I highlighted during my presentation is exactly centered around the point that you make. Although it is an additional unit, smaller unit, that you will bring it on the street, we will make sure that that sealed unit is made as such that once it is installed, you no longer have to intervene on that equipment, with the only exception when the equipment gets broken, but that is then linked with mean time between failures and so on, and the SLAs that you put on that part. The other comment that I want to make is that our strategy is not an or strategy. It's not technology X or technology A. It will be an and strategy, where we will be looking at, okay, what is the most optimal, cost-efficient way to get, in fact, the services that the customer needs. And that sometimes, for example, in a building, the G-Fast example that I made, sometimes that the better option will be G-Fast, but sometimes the better option might be that we just bring fiber to the apartment. And so it's not an or strategy, it's an and strategy.
Helpful, thank you.
Alan Nichols from Morningstar. A couple of longer-term questions. On BICS, you talked about that you've made a couple of acquisitions in the past with Swisscom and MTN. Where it's such a scale business and low margins, what other opportunities are there for acquisitions or joint ventures? And then long-term with the company, you're pretty small, and the EU certainly is looking towards larger cross-border integration. How do you feel you'll fit into that scenario long-term? Thank you.
Okay, so on the BICS, yes, we did 2 transactions which were actually not cash acquisitions, but share deals, right? We're welcoming each time a new shareholder. I think as the CEO, I can say we remain attentive to the other consolidation opportunities that will come, and whereby if we think we can create value, we'll come to the board and the other shareholders to propose. I mean, we believe in scale. We believe that now we have critical mass. There are opportunities. Some can create value, and if they can create value, we'll try to pursue them. I guess that's what I can answer at this stage.
Yeah, I think it's certainly something that we are looking at for BICS, but you need to have opportunities, and you need to be able to concretize them. So that's certainly something. Consolidation, I mean, it's a big theme. A lot of people are talking about consolidation. I think we are definitely a small player, so we'll certainly not be a consolidator. So it's very much will be dependent on what are the others doing in terms of their plan, and also what our shareholders willing to do. So far, they have changed some law whereby if there is an opportunity on the market, we could take that opportunity faster and easier than it was in the past, but there is also no willingness, as I hear it, to sell the company unless there is a real business opportunity. So for the time being, I think our shareholders are happy the way the company is run. I think they are happy with our long-term strategy and also our investment strategy and the role we want to play in the digital economy. I think they are also happy with the dividend we give. So it's very difficult for us to give a more precise answer than that one on potential consolidation. I think it will very much depend on what big players like Vodafone, Liberty, Orange, Deutsche Telekom will be doing in Europe.
Thank you.
Yes, Ruben De Vos from KBC Securities. 3 questions, really. So the first one on the spectrum. A couple of weeks ago, it was rumored in the press that new mobile licenses of 700 to 1400 megahertz in the megahertz band would be up for auction. So if you could just share your take on that one. Then the second one on subscriber acquisition and subscriber retention costs. I mean, your guidance says slightly growing EBITDA. You're saying that you'll be competing in a more competitive environment, you know, with the Telnet acquisition of Base and of course the cable entrance of Mobistar. So I was wondering if you could somehow disclose if the guidance actually includes a sort of bump up in subscriber acquisition costs or subscriber retention costs. And the third one, maybe I saw the slide 43 saying for Scarlet, excuse me for my Dutch, 2016 wordt Vollenbak goedkoper. Is that a sneak peek of basically being price aggressive on that regard with the fact of Mobistar launching? Thank you.
Thank you. Spectrum?
Yeah. On the question on spectrum, on the 700 megahertz spectrum, it's clear that with the exponential growth that we see on mobile data, that at a certain moment in time, we even need to add additional spectrum. And that with the spectrum that we have in place, and this is of course based on projections that we make, is if we see the data, mobile data growth, from a capacity perspective, it will be needed by 2018 to activate our current 2600 megahertz spectrum that we already have in place. But as of 2020-21, that will no longer be sufficient. So even with densification, etc., and we will need to add at that moment, besides reforming, besides adding the 2600, we need to add that additional spectrum, 700 megahertz, for capacity reasons. It can still be that for experience reasons, we activate faster. So in that sense, within the BIPT, there is indeed an interaction ongoing with our national regulator, and that could be brought to auction in near term.
So to your question on subscriber acquisition cost and retention cost in 2016, we do not anticipate any specific increase in this matter. Regarding these numbers, we have ambitious growth objective, but we also delivered ambitious results in 2015, so no big change in this respect.
And on Scarlet, I mean, the example is an advertising campaign that we have already done in January. So it's not that we will decrease the price of Scarlet. It's just that we want to make the positioning very explicit, and we are increasing a bit the advertising that we have spent under Scarlet. We have done it in Q4 2015. We have done it in Q1, and that's typically in anticipation of the Mobistar launch. I mean, this is very clear that we have put Scarlet a bit more on the map with some extra advertising means before the Mobistar launch.
All right, thank you.
Hi, it's Usman from Berenberg. I have 3 questions, please. The first question was just on the workforce savings. I mean, are there any restructuring charges that are associated with the early retirements? The second question was just on the Mobistar launch. I guess, I mean, you know, when you look at the launch from the outside in, one of the differentiating features of the launch is that up to date, the flagship bundles for the incumbents has been your triple play with a voice line, or your quad play with a fixed voice line. I guess what Mobistar is offering is the opportunity for people to ditch the wireline voice and at the same time to get access to very high-speed broadband. So you don't, I guess what they're saying is you can get high-speed broadband, but you don't need fixed line voice. So in that context, how do you see the exposure of your voice lines in the residential business? And then my third question was just on mobile. When I see the data usage for the entire base versus 4G, I mean, there's a huge gap, right? I mean, I guess the mass of customers are still sitting on 200, 300 megabits of data. Is there an argument for maybe increasing the size of the bundles to accelerate that the mass of the customers to start using more data and be upsold, but at the cost of some upfront repricing or giving more data in the bundle? Thank you.
Okay, I'll first do the setting on the workforce, because I mean there has been, for people living in Belgium, there has been a lot of discussion on that. So what's concerning the workforce, we have indeed agreed this week with the union, but on national level still needs to be agreed with the members and things like that. So it will come into place in the coming months, that we would agree to have an early leave plan. So people in the year they will become 60 could leave the company, stay at home, be paid around 75% of their basic salary, and we would provide for the full pension rights that they can then take at 63. We estimate that the number of people that would leave the company in the coming 3 years would be around 1,300 people, so which is 10% of our number of FTE, so quite a significant amount. It will help us for two elements. I think we will be able to rejuvenate some of our workforce, because most of those people have been working with Proximus for now a very, very long career. Most of them are still civil servants and have more and more difficulties to follow the pace of the changes. So in that sense, it's not only a cost savings in terms of number of people, but it will also help us to have a better workforce, better talent, to continue investing in innovation, in data analytics, in security. So I think that's the main element. Next to the 60, there will be some people which are currently already what we call in reconversion, so not having a job, that will be able to leave as from 58, but that's a smaller number of people. So it is still not finalized, because it's what we have had this week is an agreement with the national unions. It still needs to be approved. We still need to have a royal decree by the government to enable us to do it. And it's also on a voluntary basis, so it's difficult today to assess really the number of people that will take up the plan. It is clear that once the plan will be signed, once people will sign up for the early leave, what we expect to happen in the second quarter of this year, then we will of course have to take a provision for the early leave of these people.
Yeah, and maybe to add just on all what Dominique has said, I think IFRS rules are very clear as to what we have to do in terms of provisioning for the costs of such initiatives. So as it's very, not finalized, yet to be approved, yet to be estimated in terms of numbers, we'll come back to you with much more detail on assessing the charge. Not even sure that we will book this one in Q1 yet. So we'll keep you posted.
And so on Mobistar, no voice, we already have duo packs. So we already have packs with only internet TV and mobile. We have done even some promotions in the past for these packs. To be honest, sometimes the extra price you pay for your voice is relatively small. For a lot of households, it's a security. It's the phone of the house. So if you have kids, if you phone them on their smartphone, you never know where they are. If you phone on the fixed phone, very often you're sure they are at home. So there are still a lot of people that put value in fixed voice. It's also very often, fixed voice is also very often linked to alarm, to security system, which are more and more important in the country. So I think there is still a relevance for fixed voice. So I'm not expecting a lot of people to get rid of the fixed voice, no more than in the past. And high speeds, I mean, they claim a speed of 100 megabits. I mean, as Geert has already explained, with our vectoring technology, we can provide 100, and we have already one of three out of three customers that are on 100 megabits, and we will improve that while we are rolling out vectoring. So I think, again, very much it's about the experience, and the experience is also very much linked to Wi-Fi. And I haven't heard so far any specifics Wi-Fi around the Mobistar offer. And we know that today it's not so much the speed that you get in the house, which is important. It's about your in-house experience, Wi-Fi in the home, Wi-Fi hotspot for mobile. And I think there we still have a lot of arguments to be able to value our offer versus the Mobistar offer. And on mobile data usage, I don't think we will increase the data bundle of our mobile offer. We have done some of them in August last year on the high-end tier. I think on the low end we have 1 gig, which is more than enough currently for a lot of our customers. So the whole thinking is more how can we give people peace of mind so that they start using more their mobile data. It's not about providing with more abundance.
Hi, Andrew Hogley from Mirabeau. You've mentioned a few times your superior mobile network quality. Are you able to give us some data around that and perhaps say how sustainable you think that advantage is over the medium term? And thinking there, as cable integrates its network with mobile, does that help support the base mobile network quality? And secondly, in terms of the use of coax for some of the more remote households, what do you actually need to go through in terms of a process and the regulation and the agreements before you're able to deliver that, and what time frame are we looking at? Thank you.
Okay. Now, on our mobile differentiation, there are some assets that we have that are not so easy to put in place, I would say, that at least take time. One of the assets is the number of antennas. I can tell you that for certain parts of Belgium, to get permits to put additional antennas, etc., we're not talking about a time frame of months, but it's another unit that you need to get that realized. Second element is speed of your backhauling. All our crucial antennas where we have 3G, 4G activated, they have more than 80% is already today fiber backhauled. Also there, to get fiber to an antenna, it's again permits, it's trenching, it's a question of years. What we have, as what we see at the longer term as a differentiator is, of course, at a certain moment in time, there will be a convergence with respect to, for example, 4G coverage. But the differentiation will happen on the services and the experience you bring there end-to-end towards your customer. And there I think that in the past 2 years we already did a lot with data analytics. I can tell you that if I'm talking with our suppliers, we're at the edge of the technology to bring new data analytical power into our machinery, and I believe that is the more sustainable longer-term differentiation. It will not only be about the percentage of coverage, the speeds, etc. that you have, but it will be about the relevant use cases that are important for a customer and make sure that there you give the best performance. Your other question was on coax, and so in fact, when we had the regulation that coax was opened, we immediately acted as well, and we said, listen, we're as well interested to use the coax technology for a part of the country. We had to go to court, and the court judgment was positive in our favor, that the coax players, so this is already decided, coax players, they have to open up their assets to Proximus. That's a decision. The question is, of course, there was a kind of phrase, as long as the demand of Proximus is reasonable. The demand that we gave to our colleagues, coax players, I consider our demand even very reasonable. But of course, there is still a kind of debate on that, where the regulator has to clear that out. This is now in process. Our regulator has been working on that file since some months now, brought in some expertise there. And what we expect is that in the rather near term, there will be a kind of decision from the BIPT national regulator on whether he agrees with our demand as being reasonable.
Yeah. Marcus Link, ABN AMRO. The first question is a bit of a clarification on the extra capex on the business to connect the business segment. As I assume you're going to make extra money on it, you can price a premium for that. Is there something like a payback period you're thinking about of this kind of investment? And also as an addition to that, will that network be regulated? And does your competition have access to that business connections? Then secondly, on the cost savings, if I'm correct, so the 100 million net savings, if I'm correct, post-2018 there will be more savings on the HR side as well. What's your thinking about those savings, given that you're already growing? You're going to apparently invest a bit more on the capex side, but what's the rest of that? Is that something you're thinking of returning to shareholders? And then finally, it's a bit longer out, but at Mobile World there was a lot of talk about 5G. What is your idea there? Are you already thinking about that, or is that really too early days yet?
I can take the first question. So in terms of the capex for fiber to the business, it is so that I mean, if you see what we're doing, what we have been doing until now in point to point. Because the question was, is this driven by competition? I mean, the fiber rollout. For me, I mean, it's driven by customer demand. So it's always the same. If we have, for instance, as I mentioned, the banks equipping their agencies with fiber, it is because they have higher demands in terms of bandwidth and latency. That means it's a need, and there is a monetization against it. So that's what we're working on. If we have Volvo is equipping all their. It's actually all their dealers are now connected with fiber, because now if you have a new Volvo, you come onto the area of the garage, the car is immediately connected, offloads the data so that they immediately know what is being done. That is a new service that has a certain value. So we definitely try to value and monetize the investments in terms of that fiber. Now, it will depend on because at the same time we have the point-to-point, but now tomorrow we will have more multiplexing and the GPON technology, which will allow us to bring that technology to a lower price also, because it's going to be lower in terms of investments.
And so perhaps on the part of the regulation on that one, I think fiber today is not regulated. The regulator is very often regulating stuff only when there is a need for regulation. So what we are doing is when we put fiber, we have a wholesale offer of fiber, which we think is a reasonable wholesale offer. And so far, we have not heard pressure or whatever from the regulator to regulate fiber. But I mean, it can still come, but our position is when we put fiber, we have an wholesale offer for fiber as well.
On your question regarding the cost savings and how they are allocated, I think it's premature to answer your question beyond 2016. I mean, 2016 we confirmed the 1.5 euro dividend, but beyond this, I think it's too early to comment on return to shareholder policy in this respect.
On the 5G, indeed, what was shown at Barcelona was pretty exciting. Now it is still very early days. You know, at the level of standardization, there is still some work to do. And what we expect is that 5G will start entering into our network as of 2020. 2020, 2021. Now, that doesn't mean that you cannot already anticipate on a certain number of things. For example, what we know for sure about 5G is that it will not only about the technology, and it will not only about the spectrum, because that are two important drivers behind 5G, but there is as well the mobile densification that will play a role. To give you an idea, here in Brussels, we have about 300 macro antennas. When you would make Brussels 5G compatible, you would not need 300 points, but 3,000 points. So in our reflection, when we are thinking about a hybrid network strategy, of course, we will take into account that at a certain moment in time, we will need more flexibility points. And as we will be deploying our networks, for example, for fiber to the business, we will already foresee those flexibility points. So it's, can you already do something today? Yes, but it's an anticipation for something that will happen within 5 years.
Thanks, Vikram from UBS. I've got a couple of questions. Firstly, on all IP migration, if you could just give us more data points in terms of what you're thinking on workforce reduction and integration costs that you're booking, because you're talking about savings of 35 million, which is very far out in 2020 when we compare with some of your peer groups, who are kind of moving or talking about all IP. They're talking about big numbers and kind of very soon than what you are highlighting. So just wanted to understand in terms of delay and where there could be more upside in terms of all IP. And secondly, you highlighted your improvement in market share in the Flanders region. Obviously, you have a challenger approach over here. You're taking on, Telenet in this market. But one of the key reasons probably for improvement in market share was you were not following their move around price increases, and which made clearly your positioning more attractive. So I just wanted to understand, is that improvement in market share and sustainable longer period of time now that you will be also following them in terms of price increases going forward? Thanks.
Okay, with respect to your first question, first of all, to clarify, the numbers that we have shown are only savings in the technical domain. And so I've not, so on top of that, of course, as you will simplify your offering, as you will simplify the underlying components, you will have as well savings in our customer operations teams, in our sales and marketing teams. Those numbers were not embedded in the numbers that you saw on the slide. There I was really making a reference towards savings that we will make, for example, on maintenance, on building maintenance, on intervention on the network itself. So that is one element. Second part is that you have to do the sum of, so all IP, the 35 million you're referring to, is only the part of legacy voice. Of course, the second example, big example that I gave, is on the core network. On the core network, we are moving as well our core network to a new optical and a new IP layer. In that area, only on technical workforce, we will divide the cost by 4. So you have to make the sum the same on IT. The IT 35 million is only about cost savings in IT itself. Of course, when we will move to the new architecture, for example, in Excite that Bart was referring to, the aim is as well there to save on sales, on marketing, on operations. So you have to do the sum of the figures that you saw there and see that as the savings only in the technical domain, and on top will come other savings. So we might be not comparing apples with apples when other players making some statements on that.
And I think the global figures has been given by our CFO, where we expect to do 260 million gross savings over the coming 3 years, of which part of it will be reinvested in customer growth, things like that. But in that sense, that gives a much better global figures than the small pieces that have been able to be highlighted. So market share Flanders, I think it's a lot of stuff. I think it's first the rebranding, where Proximus is a brand which is much more appealing in Flanders than previously was Belgacom. I think it's about our complete offer, mainly with new TV interface, with the content we have brought, with the increased bandwidth on the internet, with a better service. And it's true that on prices, we are a bit cheaper than Telenet, but it's not that the price difference has always been very significant. We were at the same price, now we are a bit cheaper, but that's not the main factor. What is the main factor is in a lot of options and things like that, we offer very often more for lower prices. So on the basic bundle, I mean, there is not a big price difference. If you look at content, things like that, the price Telenet is charging for that is very often much higher than the price we offer for that. TV replay is free for us, it's 10 euro at Telenet. So if you look at the bill difference is very important, and that's certainly an argument that we will be able to continue to put forward, even though we will continue to increase our prices of the basic product, as we have always done in the past.
I just wanted to add maybe still one comment on my answer, is that it is not as such that you will have to wait till 2020 till you will see the impact. That is the number that we will reach in 2020. Of course, as we go, we will already realize gradually and in an incremental way savings.
We have time for last question and then take them offline.
Okay, thanks very much. I have follow-up. The first one is on today's release in the morning. You said that the total exposure to the roaming regulation is 28 million euros, and that you expect elasticity to make up a lot of that. But I thought the whole point of the relatively high exposure to roaming in Belgium is that the elasticity isn't particularly high. It's fairly inelastic, and that's the reason why the exposure is so high. So I was just wondering where you take the confidence from that a lot of that would be made up. That would be my first question. The second one is a clarification to Gert. You said there's a quality of broadband speeds. I was just wondering, is this just latency? As a stab at cable, I suppose. Is it just latency, or is it some other things that you had in mind there? And maybe last one is maybe a bit of a controversial one, but in the whole presentation on the technology, you sort of presented this as being at the forefront and pushing the boundary, which of course also incurs costs. Is it really the most efficient strategy for a relatively small player like Proximus to try to push the boundary, or is it not better to simply wait until a lot of these technologies become available in a standardized way with the cost advantages of scale from the vendors and then just implement them? What's really the reason to push the boundary there so much? Because obviously there's cost associated with that. Thank you.
Perhaps on the roaming, I can give a small highlight. I think what we see is that if we take the same roaming pattern in 2016 and that it was in 2015 with the price reduction, we come to a risk of 28 million. I really think we will be able to increase volume, and we will do that with a lot of more personalized offer. I think Bart has given some example on the business side, but also on the consumer side. We have started to test this year. When you cross the border, you get a message where you can immediately subscribe to a roaming bundle. With more and more people using the My Proximus app, you will be able to subscribe to a small roaming bundle as soon as you cross the border with a relevant moment. So I think these are elements that will enable us to increase elasticity. If people are more and more aware that roaming doesn't cost a lot, they will not take off their data usage in other European countries. So we have already tested some best practices on roaming elasticity in 2015, and I think we will be able to get some compensation of the price loss in terms of volume increase with the small up price that we are able to charge with the new European regulation.
You see indeed, if you see our customers, a lot of people who are traveling are still today bearing roaming. So we see that. So there is an opportunity to lower that percentage of people that are bearing their roaming.
Okay, with respect to quality of the broadband line, of course we're looking at parameters like latency, but here what I refer to are mainly the parameters, technical parameters that are crucial for a good, excellent video experience. And I do not want to enter into the details, but for example, stream gaps are pretty important there. And we are putting our threshold very stringently. Because it is not about making claims 100, 150, when we know that a normal family has today, at least, enough with 30 megabit per second. It is more important that the services that are running on top of that bandwidth, that these services, you can deliver these with great quality. And for example, in video experience, there are different parameters. We will not give you the full secret sauce of all what we are looking at. But for example, one of the elements is stream gaps in there. With respect to pushing the boundaries, first of all, if you look at our track record, it is not as such that we are jumping on any innovation. On the contrary, and there is a lot happening out there. And of course, as we are a smaller player, that is an additional challenge. But that challenge, we try to cope with that challenge by being able to connect the dots of all what is happening there and only go ahead on those things where we believe they really matter and they are really close to our business and where we believe that we can make the difference. We also have a certain competitive environment in Belgium. You know that in the north we have a player as well that is often the test case for a larger group. So that is the other element. That makes us push sometimes to be at the edge of technology, but well selected, connecting the dots and where core to our business and where we make the difference. The examples that I can give you that where we did it in the past, first in VDSL, first in vectoring, first in dynamic line management, etc., where the others all followed and the methodologies that we brought in place were all followed. So it's not blindly done.
And I can add, and maybe I can add that coming from a larger country and telecom operator, I was surprised to see that major vendors like to come to us because they view Belgium as a test market. So we get access earlier than others to some technologies and at very decent prices.
Okay, so I think the time is flying by, so it's over 4 o'clock, so I think we should stop here. Thank you very much for your attention. It was a long session. We tried to give you a lot of information. I'm sure you still have a lot of questions, but Nancy and Sarah are always there to answer all the questions, so you can always refer to our investor relations. And yes, for the people that are here, we have some drinks outside, so we'll be still happy to spend some time with you around a glass here outside of the auditorium. So thank you very much, and already wishing you a nice weekend.
What did you hear this morning? No, not at all. It's very